Good morning. Good morning, everyone. Get ready for the opening bell. All right, so we're down a little bit this morning. We're starting to grind higher. Key level to watch is 4,300. 4,300. We're pretty much anticipating that we're going to close in this area. However, if we move above 4,300, that would indicate that we could see more upside. Be looking for some levels overhead. 43.10, 43.25, and 43.50. If we can't stay above 4,300 and we start to drift down to 43.25 or lower, it seems logical or plausible that we'll go down and test um, some lower levels around 4,200. The bears seem to be in control for now, given options structure into this Friday OPEX. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday the 20th, OPEX day. Okay. First 15 minutes, we're watching price action to see how algos take care of imbalances. After that, we're looking for upward sloping VWAP for bullish trades, downward sloping VWAP for bearish trades. That applies to indices as well as individual equities. After 10 o'clock, I'm looking for trending stocks with high relative volume. It's not the only strategy, but generally, if you're day trading, especially on a Friday, and being OPEX, we're looking for trends to coalesce. If we get above 4,300, that's the key area. So be watching 4,300 very closely. Okay, we got some levels noted going into the open. 43.10 and 43.15 are from Mikey's review. That's in the Gamma Edge channel. All right, the FANG stocks are all lower except for Netflix. Netflix had earnings yesterday. Looking for a follow-through day, a second day follow-through on Netflix. Let's go take a look at Netflix. We got targets all the way up to 500, or rather price targets all the way up to 500 on Netflix. Okay. I'm starting to think about taking profits. All right, taking my Apple position and reducing it to about 100 shares. I have 300 right now. I'm thinking about reducing down to about 200, or excuse me, 100. Closing my covered calls. I've got my cost basis pretty low, below 138 now. So, all depends on how the markets trade today. I would like to buy some ExxonMobil. Okay, with the whole Pioneer Natural, they have the largest shale acreage. And with ExxonMobil acquiring, I could definitely see this moving much higher. That's something I'm thinking about. Maybe selling, 200 shares of Apple and buying, starting out with 100 shares of ExxonMobil, maybe doing a buy right, something like that. Let's see what ExxonMobil looks like pre-market. We've got 7 minutes to go for the opening bell. 7 minutes to go. ExxonMobil is off 36 cents at the moment. Okay, keep an eye on Bitcoin. I added to some Bitcoin on Coinbase. Okay, so 4,300 is a major level on S&P. We need to get above that if you're bullish. Looking at the current condition, what condition my condition is in. Looking at the S&P 500, we've lost this pivot up here. We're rolling over. I'm planning on the likelihood of a test of the 200-day again. Maybe overshoot that, test the lower trend line. We got a major volume by price node right in this area. Stochastics is turning over. If we got down to 4,200, I think that would be in an area where we would consider or be watching for a big bounce next week. Okay. If you're an investor time frame, you're holding on to some cash and you're waiting on a confirmed bounce. That'll occur when RSI turns back up along with MACD and stochastics, along with an increase in volume. Right now, we've got about 3 distribution days so far this week, higher than average. We gained 32% on the year from October low, and we've given back again, starting to give back more. It's about 6% off the high. S&P. Okay, so at yesterday's close, we're down 7%. It looks like, all right, we're down 80 cents on the spiders. Futures are trading right around 40 to 92. Riding a higher low and a higher high pre-market. We hit 42.95 and now we're putting in a higher low. All right, so if you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. I'll be here throughout the day till the close. We had big earnings on Tesla and Netflix, watching Netflix for maybe some follow through. You have quite a few stocks that are showing a daily count that is bearish. Okay. Okay, we got 3 minutes to go. 3 minutes to go. So if you're a investor time frame, you're holding on to some cash. Maybe you have that in short-term treasury yields. And waiting for a confirmed bounce. Somewhere around 4,200. It's a major volume by price node right there. You can see. Thursday market on close, we had this kind of look. Okay, so we'll look for that to change. All right, let's get ready for the opening bell. 4,300 is key level. 4,300. First 15 minutes, if you have profits, I'm looking to take profits into strength for if there is any profits to take off. NASDAQ 100 is right now, presently 50-50, 50 green, 50 red. Starting to grow in the red. Futures are continuing to move higher. If futures continue to move higher, we should see some puts monetize. If we start to get any kind of follow through, watch for puts to monetize. Watch if you're watching your options chains. As we keep rising in the money puts below 4,300, most likely we'll take profits. That'll help us move higher. All right, so we got less than a minute to go. Less than a minute. Good luck, folks. Good luck.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investments.
All right, we're open. Gapping down. Bitcoin's much higher. Bitcoin, watch Bitcoin. 4,300 key level. Bitcoin. Bitcoin strength noted. Okay.
Anytime, anywhere, on any device for free. No place better than the Schwab Network.
Then watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device. Then watch the market with the Schwab Network.
Okay, let me get Lee Star squared away here. Lee Star said to be back in a couple of weeks. Soon.
Company of not much else today, frankly, as Apple is lower. Tesla's getting hit again. Alphabet and Amazon.
Okay, we're hanging out down here. 42.75. We need to get back above 4,300. We're in a negative gamma.
On the flip side, though, you've got a bloodbath happening in the solar space. Let's go to Caroline Woods to talk about it. Solar Edge first got slammed last night. But the thing is, this whole group, Caroline, since the Inflation Reduction Act.
Okay, let's get oriented here. All right, S&P 500. We're sitting here just below 42.75. That's very near where we closed. All right, Taiwan Semiconductor, seeing a lot of counts that are bullish. Taiwan Semi, TSM. Okay, watch Taiwan Semiconductor, TSM. All right, watching Taiwan Semi, looking pretty strong here. Netflix following through. Netflix, hot to trot. Oh, we got a second day. Netflix. Okay, we're above pre-market highs on Netflix. Looking for a follow-through. Okay, starting to see a little bit of short covering. Watch the FANG stocks. If they all start to show short covering, Tesla is still lower. Okay, Apple, weak. I'm going to call. I'm going to close those covered calls here shortly. Apple, continued weakness on Apple. Okay, looks like Apple could drift back down to 170 or so. All right, I just covered my calls plus one, plus $1. For $1. Shoot. Nice job there, LA. Okay, I just bought those covered calls back on Apple. Depends on how if we bounce. All right, shorts will cover most likely. Watching NVIDIA. Watch NVIDIA. Okay, so maybe semis bounce first. I'm noting that NVIDIA is starting to turn. NVIDIA. Intraday. It still looks bearish, but looking for a bounce. Watch Taiwan Semiconductor. Trying to do something. It's still too early to tell if we're going to get any kind of follow through. We got to get above 4,300. S&P 500 needs to get above 4,300. Right now, we got some shorts covering, it looks like. 42.75. We got a nice run, about 25 handles back up to 4,300. Meta on the move.
It doesn't seem like there's an obvious answer here other than they've got too many parts, too many products, and nobody to sell to. So, yeah, pretty rough stuff. Thanks very much.
VIX dropping.
Absolute brutality. Adding on to a year of pain already. Let's bring in Jeff Pierce.
Okay, Meta turning. All right, all the FANG stocks are starting to show more short covering. Still early. Taiwan Semi, very interesting here. Okay, let's see if we get any kind of follow through on Taiwan Semi. Stalling a bit. Okay, NASDAQ 100 is 55% red on the day. The highest the top five on the NASDAQ 100, CSX, Netflix, Old Dominion Freight, Cognizant Technology, CTSH, Gap up, And AMD. AMD trying to bounce here. AMD. All right, AMD on the move. AMD. AMD. Let's see. Do we want to do anything with AMD? Okay. U.S. chip curbs give Huawei a chance to fill the NVIDIA void in China. It's always another side of things. Okay, advanced micro. Looks like that's going to go.
Boy, it sounds like a lot of positive things for stock fighting the
Advanced micro.
week low right now. How can you think the market's giving it?
I don't see any news on advanced micro yet, but it's bouncing. Let's just check Money Magic's levels. We could be bouncing at support. Let me just check AMD. Okay, 105 and 106. AMD 105 and 106. All right, so that's $1.25 overhead. Be careful buying the high right here. Volume looks pretty good so far on AMD.
Even next to Visa, MasterCard, it looks particularly soft. Didn't really expect American to kind of be in a similar category to Discover Capital One, which, it's not. I don't want to go that far because Discover just broke down hard again. But it does look a lot like the chart Capital One. So I'm kind of surprised that the market is taking such a sort of negative.
AMD looks like it wants to go.
In the future, with all the customers maybe swiping too much right now. I don't know. I mean, I guess that's kind of a thought with the provisions scaring investors off, but everything else seems pretty good with quite a bit of actual growth in it too. So, a bit of a head scratcher.
Okay, AMD watching closely. SPY, S&P at 4275. We'll come back to that in a minute. Let's keep an eye on AMD. All right, keep an eye on AMD. All right, AMD. Okay, AMD. Okay, AMD, what you got? What you got for us today? AMD, nice right out of the gate, but does it have anything left in the tank? Let's see if we get buyers to step up here. Buyers are starting to step up. A little profit taking there above these late evening highs. AMD.
Hey, compared to the other chart we were just looking at, they certainly look a lot better, Visa, MasterCard, than basically everything else in the group. And even if we're going to maybe lose a little bit on the debit transactions, according to the Fed, the market not too bothered by it. Hey, real quick, story that we kind of lost track of here the past week because other things came up. But still,
Okay, don't hear any action on the S&P.
about the labor dispute between the autos and the workers. There's something maybe percolating here for a deal. Is that right? That's what it appears. At least there's some
AMD.
some hope out today. UAW and GM might be getting closer to that deal after a 30-plus day strike here.
Nice volume at the open on AMD. Let's see if this follows through. Breaking a downtrend. No follow through yet. AMD, no follow through. Spine, no follow through. S&P, no follow through. Okay, looking for a follow through. AMD starting to show a bit more strength. AMD.
Well, right now the stocks are up in an overall down market, so I think that's telling us something. You probably read into it a little bit there. So thanks for the heads up, Jeff. A crucial story still for those companies to figure out, especially in the context of Tesla's earnings, which showed complete dominance in the EV market right now. Good stuff, Mr. Pierce. One more other mover before we continue. We're going to come back and talk some mega caps and social media, but another look at earnings with
Good morning. Good morning, everyone. All right, S&P is moving lower. So longs are probably going to fade from these highs.
Maybe not the worst either, but the stock is getting punished. Watch it. We'll come back to talk Snap, Meta, a big difference.
Okay, VIX is hanging out right around 20, so okay, let's take a look at the 60-minute on AMD. I want to buy a little short-term downtrend. My concern is that the markets need to bounce. I'm going to wait. AMD, I'm going to wait for a retest, see if it retests VWAP. Okay, let's just check the sectors. Okay, we got about 60% of sectors green. With semis leading. All right, semis are leading. Watch for a follow through. Bitcoin watching. Okay, S&P, we need to get above 4,300. For now, we need to get above this 43.25, 43.75, 42.75. We need to get above. Okay, AMD watching. AMD is trading 47% of its ATR, 61% of its daily range. Snowflake. Most of the FANG stocks still have sell signals from earlier in the week that have not been negated, except for Netflix at the moment. Netflix is on a buy on the daily. Everything else is still on a sell. All right, AMD looks like it wants to keep going, eh? It's a higher low. $105 is a gamma level, AMD. Okay, AMD starting to give us a pivot.
So the actual growth coming back in here, as opposed to just kind of cleaning up the financials, I think is part of this. Where do you think there's the most potential to surprise on growth? I mean, I know you talked about the AI.
NVIDIA pushing. Netflix looks okay. Google looking for a higher high. AMD. Go on, AMD. Give us something. All right, SPY just feels like it wants to drop off. All right, AMD. All right, no follow through on AMD. So it is 9:51 on the East Coast. We're looking for a follow through in some of these chip stocks, but nothing yet. Okay, we are drifting lower. If we do lose the low, 42.60 and then 42.50 are the next levels. $105 is resistance on AMD. We're just below $1.50 below that level. And not seeing any follow through in the FANG stocks yet. Just looks like people took profits on that small bounce. Some shorts covered. That's about it for now. Okay, the top 5 stocks remain CSX Rails, Netflix up 1.37%, Netflix, Old Dominion Freight, Cognizant, and AMD. AMD showing 8 million shares trading so far. AMD. Yesterday, AMD traded over 50 million shares. Okay, so the dominating trend is down for now. Still down.
He shut that down. He owned that really well. So are they bullish in here?
We're still making lows. Looking for a move down to 4,200 if we can't hold these levels, 4,260, 4,250. The bulls have any shot, we need to get back near or above 4,300. We're expecting a pin right around 4,300, anticipating.
Basically a broken wing, unbalanced call butterfly to the upside, where it can offset some of my costs on this initial trade, as opposed to maybe buying the vertical spread. So if I'm paying roughly a 750 debit, there's my risk on that, $750 per spread. But you can see here from the risk profile.
Okay, Elon Musk is going to launch X premium subscriptions soon, whatever that means. Netflix looking like it wants to keep going. Second day follow through. Okay, we got a flat VWAP for now on Netflix. Netflix flat VWAP. All depends on the indices right now. Indices are not giving us much follow through, even though we do have some stocks that are highly. There goes Intel. Intel. Okay, there goes Intel. Semiconductors are strong. Okay, the FANG stocks are still mixed and lower for now. Netflix is up $7.42. Looks like it's just going to keep going. Has a flat VWAP. Okay, Netflix, Morgan Stanley gave it an upgrade too. Netflix, Morgan Stanley gives it an upgrade to overweight and raises price target to 475 from 430. Now, Netflix raising its subscription prices in its conference call, mentioning increasing subscribers. Netflix reported subscriber growth of 8.8 million, well ahead of expectations and marking the biggest quarterly growth since the second quarter of 2020. The firm also said it expected an operating margins increasing. Wow. 20% for the full year, even though they've assigned, even though this is me talking, even though they've, I think, came to some agreements with the writers. So, and actors. So, looking pretty good. So far, so good. Netflix subscribers surge as company announces price hikes. Okay, I'm going to give it a few more minutes. I want to buy some Netflix, but I don't want to do it at this price right now. Volume looks pretty good. Volume looks good. Looking at yesterday's volume.
So I looked at a double diagonal here, and sometimes we call this one a strangle straddle swap, because what I can do is in this
Looking at yesterday's opening volume in the morning.
You'll capture that earnings event. You sell the 9.5 strike straddle in there, the call and the put combined.
All right, I'd like to see that volume pick up.
Offset some of the risks, make it risk defined. I'm going to go to the November 3rd weekly series that expired in 2 weeks and buy a strangle. in there. So I'm going to buy on the downside the 7 put and on the upside the 12 put. This makes it risk defying. You're trying to sell that volatility, which is about 168% on aggregate from the near term.
Okay, so Morgan Stanley upgrading.
And then buying about 130% by volatility in the next option series.
I like to see the markets bounce first. We're still drifting lower. For any longs, as any pullback that continues will probably drag a lot of stocks with. Even Netflix, pretty strong. I'm thinking we can get a better entry. Okay, Netflix. Okay, we continue to move lower. S&P is lower.
Let's talk some NVIDIA. Chart's still hanging on to its high lows, but it did have a couple tough days this week. It's hit, but it is certainly far from down. Gonna get ready for the most important report of the earnings season, and still probably the most important company for the market.
Just keep thinking they're going to come in here and start buying this dip. No signs of it yet.
Stocks are down. We'll be right back. Young lady who was mid-30s, couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her. The client won't care how much you know until they know how much you care. Welcome to Schwab Network.
Daily live exclusive content tailored to today's investor.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange. Fact-specific analysis featuring the smartest minds in the business.
No politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week. SchwabNetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
A little bit of short covering. Markets are just stalling here. We still have about 55% red, 45% green on the NASDAQ 100. AMD trying to break out here. AMD showing strength. Sectors got a little flag on AMD. A multi-day downtrend perhaps is reversing. Watch AMD. We had this happen on Apple yesterday, but Apple reversed and moved lower. You can see where I had the trend line. We're at the 175 call wall now. Did we get a bounce? AMD looking for that breakout, looking for volume to pick up, nothing yet.
Maybe about 1/3%, so yeah, not that bad. Watching the S&P, Russell's hanging in there despite a real regional bank scare, but actually the big drop is in Regions Financial and the S&P 500. So small caps are actually doing okay. Well, coming up over the next 2 weeks, we're going to be looking back on some reports, looking ahead to some next week. We're going to trade NVIDIA because the analyst notes are already thinking about the earnings, which are still about a month off, because remember they report pretty late. But the sell side has been busy this week, and mostly price target cuts for NVIDIA. So
still weak.
Detail in a moment. And we're also going to be charting, getting ready for a couple of interesting companies GE in particular, I'm looking forward to the update from the chart master as we look at some of the earnings for next week. About new studio.
Yeah, AMD just sitting here.
Still host on the Schwab Network, man. What are we talking about this
All
morning?
right, we'll continue to drift a bit lower. Maybe hold on to some of your puts.
Crude maybe up 1.5%. Kind of interesting there.
Yeah, Oliver settle in. I think we could see more of this kind of type trade as you described it as. I'm not sure how that applies in terms of the
Okay, let's look at the S&P daily. Just feels very bearish and building, more bearish. 200 day is right below. 200 day, 42.33.
We're very comfortable in this range right now, right around 4,400. It's the middle of the range that we've been in since June. So this is a market that's waiting for more information. It's dealing with multiple headwinds. So I've been arguing for a while.
Okay, we're down 7.5%.
Just below that, still a win for the Bulls.
S&P down 7.5%.
Still above that little dip, so you know it could be worse.
This is when we saw all that energy come into the market associated with AI and the real tech run up that we saw into those highs, and you can see how basically we've been in a range since. So again, just kind of working our way through the middle of it, very random, limited in terms of
Keep in mind the JP Morgan long put is down at 40.55.
That was such a harsh, fast move. It looked like it validated some of the crude.
4,400 seems so far away and is pretty far away. 4,300.
Little bit of economic question around the world on the demand side. Still supply to be seen from some inventories. But when we get back to 90, it feels like we should have that.
Is a key level. We're down below that, so the bears have control for now.
Because when you're talking about higher crude prices, you're talking about a headwind for stocks, and you're talking about a further complex situation for Fed Chair Jerome Powell and the Fed to deal with. Now, we were just looking at a contained market in terms of the S&Ps, and one could argue a very similar pattern playing out here in terms of crude. We did see that spike, as Oliver mentioned, recently up to 95. You'll notice that that also coincides with the fall highs from last.
Okay, it feels like we're just going to keep moving lower.
On the left side of your screen as well, up around October, November of last year, up around 95. And then, kind of getting back to what Oliver was talking about, that big spike lower that we saw back down to 80, that coincided with the big move that we saw in yields. They were spiking, and that raised some demand concerns. Here we have the war on Israel coming back into play, the conflict in the Middle East, and that's got prices back in the middle of the range, basically. Now, again, relatively medium, considering what could be playing out. I've been hearing a lot about how this is tied to involvement in Iran or lack thereof at this point, and more so supplies through the Straits of Hormuz, and how that could be a real issue if that becomes a problem in the coming weeks.
We know geopolitics keeps prices elevated at this point, but we're waiting to see is do we get a spike out of this range at this point. Sure. Style. So far, yeah, so far it hasn't quite been like that, but which is a good thing. For reasons you described.
All right, so I am definitely got my eyes on ExxonMobil for a potential position. It is pulling back now, so that'll give us a low pivot. Looking for a higher low pivot. My reasoning behind ExxonMobil is the deal with Pioneer and all of that shale.
I think this kind of ties back to that energy discussion as well, because if you remember, the rate that we saw in the US dollar last year, when we were topping out 113, 114.
Beaumont, Texas, getting flaring.
Low tick alert minus 800.
Okay, we continue to move lower.
Uncertainty in terms of what it would create for the situation for Europe. Higher natural gas prices when they need it in the winter ultimately is going to weigh on the demand.
All right, so weakness persists.
That they could have dealt with associated with the Ukraine war. Now, we're dealing with that in a very similar fashion. That's why I say look at the dollar. If we were to see the euro currency start to weaken, if the war in the Middle East were to worsen, that 21-mile channel, the Straits Hormuz, it travels a fifth of the world's petrol flows through it, and we're talking about level 18 is 20% of natural gas.
Okay, we continue to drop down. S&P weak. All right, AMD no follow through. So with the S&P moving lower, I'm not anticipating much on the bullish side for today. The daily,
multinationals definitely deal with that as a headwind. And yeah, I think that it could become a bit more of a problem for stocks if this dollar starts to accelerate, if the energy crisis becomes worse. And again, kind of tying in natural gas prices to the euro currency, but ultimately the dollar being the one that gets pushed one way or the other as a result.
Well, it's a good reminder that we need to be watching ag gas too, because of the regional specifics about where all that flows through. So it's a good.
All right, so the S&P, 200 days right there.
Typical risk-off signal, which is higher dollar, but it hasn't really been playing out that way. So it's a good thought to connect that to
42.33.
Gold is up alongside crude, so a little bit of a safety bid there. The dollar's still red on the day. Stock's not too.
All right, starting to see some. All right, watching the volume here as we hit this level.
Yeah, I would say modest decline in optimism in NVIDIA, but really quite optimistic still when we get into some of the numbers. Today, this morning, NVIDIA bucking off the weakness that we're seeing in the overall market is really the screen starting to light up in the last 10 minutes with the S&P down 20. NVIDIA still up 45 cents, so just above the unchanged line. Up about 0.1% as we speak right now. KeyBank analyst John Vin lowering the price target to $650 from $750. Oliver still implying $230 in upside from here on a $420 stock, so over 50%, in a stock that I think you could make an argument that many would agree with. But this is the stock of 2023. It's up over the last 52 weeks, nearly 250%.
Okay, S&P continues to show weakness. The 200 days right down there at 42.33.
Seems like a pretty substantial decline off of 500, but when you put in perspective the move over the last year, it's relatively modest. They do keep an overweight rating on the shares. Broad-based demand, they say, in terms of trends, remain weak. They see China showing limited signs of recovery, but they do say end demand is not.
Okay, next level of support right here.
Compare this to the overall street stance on this stock. 60 and 63 and
42.50. If that goes, look for a flush. Looking for a flush.
price target, at least in terms of what Bloomberg is watching over the next 12 months, is 649.70. So let's call it 650. So right in line with what John Bennett at KeyBank is saying. We did get a neutral rating out of Edgewater Research today. Wolf Research keeps their outperform as of yesterday with a 630 price target. Oliver, never in good
All right, VIX spiking.
Suggests that a stock that's up nearly 250% from its lows and over the last year could be considered, undervalued. But you could listen to the logic on a blended forward PE. This thing's
Okay, let's see.
over the last year and really the last couple of years.
Okay, the dollar, 10-year reversing. 10-year hit close to 5% this morning. Yesterday hit 4.996. Today it's hanging out near 4.99. It's currently at 4.93. VIX is running. All right, we're losing 42.50. All right, we're overshooting support. It could be a bounce area. Just be aware of it. The bears have control. Just keep thinking flush.
To your point there, that seemingly is the market telling us that it's actually not that bad of a deal.
Bitcoin at the highs of the week. Just drifting a bit back below 30,000. All right, we're coming back a bit now. Bitcoin watching for higher lows. Intel had a nice little pop and then back to VWAP.
An untouchable guidance from the quarter before, and then did it again. And so I guess the only concern that I saw is that it wasn't able to kind of sustain the excitement. There's some really, really high price targets on this thing. It's had a really, really nice year. You can see that chart there, that first gap up 2 quarters ago around earnings. We don't hear from them again for about a month. I think it's November 21st is the earnings date, Oliver. So a lot can change between now and then.
A lot going on right here.
From a charting standpoint, if it does break below, I think it's around like 360, 370, where that gap up is. There's just not a lot of price activity. Could be a lookout below, but quite frankly, that's a long ways below where we're currently at.
Okay. All right. So,
Right, 4250.
Surprised that the shares have not done worse around some of these analyst price target cuts. Actually, because even though they are
Okay, we've been on a sell signal all week, basically, since Wednesday. Yesterday, continuation on the sell side. 9:30, a sell signal. VIX still pressing the highs, putting pressure on the bulls. Bears watching. FANG stocks, Apple's starting to see a little bounce, a little short covering. That's about it. Tesla, high or low on Tesla, 216.
It's not really that NVIDIA has done anything. If anything, it's actually made it more attractive. But the overall market really complicates things when you talk about how much yields have impacted that.
Okay, we're about to trigger a buy signal off the low. Need to get above that candle right there. 4260 overhead. What I'm thinking now is if we bounce back to VWAP or put in a bear flag, we'll probably see lower lows. So looking for a bear flag.
All right, Dan, it's a Friday, so let's trade the big winner on the year, and it actually just put positive as we speak for the day.
Yeah. Yeah, Oliver. Yeah, it's hanging in there today. Yeah, even with the selling pressure, we're seeing NVIDIA hold this 420 to trading 423 right now. The one thing I'm looking at, and Alex brought this up, I mean, some of the technical levels, when you look at this stock going back over the last couple of months, and to me, it looks like 400 is some pretty meaningful support.
All right, so not much of a bounce so far.
Pretty substantial air pocket, but by and large, it's held this 400 level a couple times in the last couple of months, Oliver. And I think if we continue to see some
AMD is still fading, no follow through. It was looking strong to begin with. Dollar is ripping now. Dollar is at 106. Dollar. All right, SPY.
So I'm looking at the 400 strike. So in this case, I'm looking at the November expiry. So we're 28 days out from that, and so that's before the earnings announcement. And looking at the selling the 400 put and buying the 3.
Looks like we're going to keep going. Looks like we'll keep going. Very brief flag there. Still on a sell signal.
$2%
Volume picking up.
over the next 28 days, and that's a pretty, I think, a decent return profile with the opportunity to get put in the stock below 400 at expiration. And that's a level I think that's worth picking up the stock. So really, you'd be picking up the stock at 392 in this trade example. Again, have the opportunity to collect some premium, see how this plays out, and be out of that position technically, or either in the stock before the earnings announcement.
I feel like this trade is, makes most sense when it's in the number one, stock of the year, basically, because
Right.
The odds that you're just going to get to collect this credit and keep it are pretty high. And then if you don't, all right, so now you own a stock that people are going to be scrambling to buy on dips. Nvidia hasn't had a real dip since this whole thing began. I mean, we've had a few shake-offs here and there of the excess, maybe, but we haven't had a real dip in this thing. So if it does, come on, it's not just going to go straight down unless it's like the world's worst earnings report.
Well, exactly. And the other thing is, Oliver, if you look at the margins, you look at some of the metrics within the market itself, their positioning moving forward, the evolution of the AI space, yes, they've come off the frothy levels that we did see earlier this fall or late summer. But again,
Still looking like a bear flag.
Metrics as far as from a fundamental standpoint, you still think that if the market holds together here, if we continue,
All right, we continue to lose this level.
in the equity markets after settling off some of the interest rate concerns and the geopolitical concerns, that Nvidia should technically be one of the leaders in that realm, and so there's a fairly decent probability, I think, that we're going to continue to see upside if we see the equity markets maintain either sideways.
All right, VIX looks like it's going to push.
Okay. Thanks so much for selling the downside in Nvidia. Hoping it doesn't get there, but if it does, then all right. You own Nvidia. Congratulations.
That's right.
Thanks. Quick little update for you. As Nvidia went positive, so did the dollar, and equities coming under some more pressure. Still watching the regional bank trade, by the way, because that's gotten a little bit ugly here. Stocks taking a bit of the bigger hit now. Russell lowered by about 0.7%. As I mentioned, dollar positive. Bonds are still bid too, so it's a little bit of a different type of risk off today. We're going to keep talking big tech, though, when we come back. The mega caps will be in focus because we only got really one so far, Tesla. I'm not sure if Netflix really counts. Under 200 billion now.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens.
All right, we continue to drift lower.
You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Coinbase just off the highs. We came back below VWAP. Coinbase, we're about $1.50, $1.60 off the highs. Watching Bitcoin.
Wrap up the trading day with me, Oliver Remick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
All the need-to-know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network and tune in on the available anytime, anywhere, on any device, for free. Recap your trading day with the best, right here on schwabnetwork.com.
Looking for a reversal here. A lot of people probably going to take some profits off.
Live reaction in global markets. Available anytime, anywhere on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
you're in Philadelphia and you're a finance professional, don't miss Friday.
Apple down to 174. Google hanging out at 136.50. The FANG stocks look weak at the moment with the markets lower, as you would expect.
Wednesday and Thursday next week. All right, let's get ready also for next week to talk some big tech earnings. Ken Mahoney joins us, president at Mahoney Asset Management. Ken, I like the way you framed our entrance to this earnings season as the stock market limping in. A little hurt, a little wounded. Is this where we get banned?
All right, Massey, M-A-S-I. M-A-S-I.
Sometimes you come in hot on into earnings, and you get that sell news reaction. I kind of like this. We're kind of limping into earnings. Expectations are lower than low, no matter. We may get a few surprises. Now, one thing we always tell investors: don't jump in front of earnings and buy a bunch of calls or puts like Russian roulette. But the market playbook is pretty clear. They beat estimates, raise guidance. Not that time to be going in as an investor. What happens thereafter? All the analysts catch up. Hold, buy.
Okay, let's see. Massey. Okay, looks pretty active here, Massey. No news. I don't see any catalysts. So I'll have to pass on that for now, but it's moving. Massey.
They weren't running into AI as fast as the market left them. These conference calls that are in the video said the word AI.
All right, S&P continues to drift lower.
Now we're looking at this earnings season where, look, we still get all the great verticals from Microsoft. Right? You get gaming, you get cloud, you get network and security and all those type of things, and Windows and everything. And so, hopefully some of what's been we're hoping Microsoft, all those seven, had the best room to run because that's going to hit the hardest over AI.
All right, VIX is moderating at the highs. It looks like it could fade, so watching for a bounce. We're at an area where we would expect a bounce. 42.50. We're just below that level. Just below that level, 42.46. All right, dollar's starting to reverse. Might be a good area to think about longs. If we can get back above 42.50, 42.60. I don't know. The trend is down multiple days. The likelihood, right, is that we'll move back up towards VWAP, get rejected, and an area to re-short. Right now, I'm not doing anything. I'd be taking some profits off the table. Could see a little bit more downside. Most stocks not having a good day. NASDAQ 100 is 60% red, 40% green. Applied Materials, that's up $1.29. Applied Materials. Watch Massey. Interesting price action. Starting to see some volume down here. Could be some shorts covering too. I don't see a catalyst. I don't see any news on Massey. Looks like it wants to keep going though. Let's see what the RVOL is on Massey. They missed earnings, so we'll pass on that one. Massey. All right, continue to move lower.
So I still think this company still got a lot of potential. Still sitting a lot of cash. Cash is nothing, right? But now you're getting 5%. And again, I think the expectation is very high about the iPhone 15 rollout. Remember, Tim Cook did a nice job pivoting from a hardware company to a software company to a service company, which they are now. So I still see about an upside. May not be a barn burner.
Looks weak. Looks weak.
2 billion customers. However, they have something tomorrow that connected to your
Stop above 4250. If you're sliding your stops lower, I'd have one just above 4250 now. VIX still hanging out at the high. Still a lot of pressure on the markets.
Yeah, that's interesting. Our study showed that there's 25% users have a phone 4 years or longer. Now, if you have a phone that's 4 years or older, guess what? The battery probably doesn't work. The apps don't run. You're almost forced into an upgrade. So, you know what? Christmas season, Santa Claus coming around, putting some stockings in. I think it's a good bet because you said a lot of people with outdated phones can't keep up with the apps. Phones don't work well. And what a great gift idea for those who have everything anyway to upgrade their phones.
Lots of puts building at lower strikes. 4,200. A lot down there.
These companies are in the category of still far below COVID highs. At the moment, what do you think is possible for those types of stocks that were COVID heroes and they got real hit hard over the last 2 years?
Right, but now we're starting to see multiples expand because
4260, 50, 4225, and 4200. 4225. 4225 would be a next level.
these companies can start growing the top line, and we'll watch it during earnings season. They can actually beat and raise guidance.
Okay, maybe they're headed there. 4225. Looks like 4225. 4225 next support. All right, 4225 next support level. If you're an investor, you're just looking for next week to give you better direction. I plan on taking a look at ExxonMobil next week with the deal they're doing with Pioneer to sell some premium around my position. Apple is weak. 173.90.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a minute. Other guys were charging $400-$500. He just didn't want to do that. He's proud of the price he's charging. My dad instilled in me always put people before. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me.
Every morning, every trade, always.
Okay, we're starting to get by the dip stops. 423 buying the dip. We'll see. This triggers. Still got red signals, 15, 30, and 60 minute. 15, 30, 60 minute SPY are still red. And bearish. Bank stocks not showing any short covering just yet. A little bit on Google, a little bit on Netflix.
Download the Swap Network app and join in on the latest market trends. Three. Swap.
Accelerate your market knowledge and shift your perspective.
All right, SPY, we got a buy signal at the low.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
All right, starting to look a little bit more like a reversal. Back to VWAP, most likely we have a negative bias for the most part. We're below that 4,300 level, 4220, 4275. Looks like some shorts covering.
Versus the S&P 500 rally. Now, much of the gap can be, again, attributed to the single metric being sales volume. It did report flat volume last quarter, meaning all their growth did just come from price increases. And while performance is good news because it does demonstrate pricing power, it also does raise the big concern among investors. If they can't keep relying on price increases, then sort of like what does then your quarterly earnings and your overall picture look like now going forward? So investors, I think, will want any progress on volume because if you continue to see flat or declining volume, that's a big problem.
All right, a bear flag or a reversal. Still got red signals on the 15, 30, 60. Looks like shorts covering. If we can't string together a half a dozen or so candles.
Just below 65, 64.99 was our high point. Could not crack above that 65 level, but you can see this area right here. Right around
15, 30, and 60 are still bearish. We're dealing with 42.50 now. If we can't hold 42.50, they could shoot it down to 42.25. Next week with a lot of earnings. All right, the dollar just rolled over like massively. Dollar just rolled over. I don't know what's going on with the dollar, but that just rolled over pretty emphatically. Wow, big rollover in the dollar. Ten-year. 10 years fading. Do we roll over one more time? Looks like we're going to try to bounce. More? Okay, they want more. More. Okay, the dollar dropping off, the 10-year dropping off. Watching the 10-year.
But we're still short. We're still short of the 50 midline here. Still bearish momentum. Couple that with
4.9.
above our 21-day
Nearly 5% earlier. Pre-market. All right, we're going to push a bit lower, it looks like. S&P. If we get down to 4,200, that would be something else. It's quite a ways to go. We're down more than 30 handles now on the futures, 35, 35 and a half, 42.67. All right, still looks weak. I don't see any bounce in the FANG stocks yet. The FANG stock's still drifting lower. Deutsche Bank commodities continue higher. What's gold doing? GLD. Gold higher. All right, gold. All right, we continue to move lower. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Wow, it feels like 11:30 already, not 10:40. Feels so much later in the day. All right, so gold higher, S&P lower. S&P is lower. I don't see any capitulation yet. It doesn't feel like capitulation.
The action that has been happening. Also, their complicated supply chain problems.
The volume really hasn't picked up that much. It's interesting. FANG stocks don't look very supportive at the moment. They're all at the lows.
Earnings gave us a big boost, pushing us above that resistance line into new yearly highs near 243. But it was not to be. The trading gods are cool. We had a bit of a rough roll here. We gave back all those gains and even more. Big downward channel here. Yeah, I mean, it's it never stops hurting. You never get used to stuff like that happening to you. But we fell downward a little bit here. We crossed below the old lows from our range near 193. Now we're kind of holding on these lows right here about 2250 or so. So that would be another point to be on the lookout for in trading today here. But moving averages all trending down, price below all three, fastest crossing below slower one here with our 63 and 252. Sometimes called the death cross. Not the greatest trading signal, but
all right, 52-week lows continue to pile up. Just watching some of those.
Crossover into the oversold area. Quick reminder here too that stocks can remain oversold or overbought for long periods of time. You shouldn't be.
All right, so the more we drift lower, the more probable is the higher probability that we're going to test this 42.25. We need to see this reverse and volume pick up. Volume's not picking up yet.
Those are some potential congestion areas to watch as well.
Okay, it seems like Boeing desperately needs to hold that 181 there, because man, what a rollover, what a fake out, what a rug pull on that. Okay, last one. No rug pull just yet on General Electric, but I don't know how many people have even noticed how well the stock is doing.
I don't either. Actually, this one was the most interesting.
Okay, drifting lower.
Expected to be benefits of a lot of the same tailwinds at for a name like Boeing. Aerospace actually one of their brightest spots, including significant growth they've seen in their LEAP engine deliveries, as well as growth in their commercial services businesses, which also then speaks to some of their defense engine supply. So all in all, the third quarter, we are expecting that segment specifically to indicate around.
What's NVIDIA doing? NVIDIA, where are you? NVIDIA. Bitcoin hanging out right below 30,000. Bitcoin. LABU. Wow. LABU is below 3. Netflix pulling back. All right, so Netflix is going to give you a better entry if you missed it, if you weren't in it before earnings. Okay, Netflix continues to drop off. NVIDIA. Apple, Tesla. Yeah, the Bears are definitely winning today.
But you can just looking at the general shape, you can see we've almost doubled from about a year ago here, trending upward very strongly, but then kind of trailed off a little bit here. We weren't able to break above those highs here, 118 here. And if you look at RSI, it reflects that. You can see this downward sloping trend line, bearish divergence as price continues to rise. RSI fell off notably here. Now we're in bearish territory for the RSI here. So let's just see if we can break those trends. I want to zoom in a little bit on this chart since there's a lot going on here. We've got a lot of horizontal levels to watch here. So you can see here, we slipped below this 107 mark. That was a frequent stopping point for price, this green line right here. You can see as well our moving averages, another bearish crossover here between our 21 and 63-day EMA.
All right, looks like the 200-day Bears are definitely winning.
Those beyond our previous lows from late September here, if we do keep going downward, 102.63 or so represents the lows from back there. And if we were to move to the upside, 110, confluence of bottoming points and the stock price here with our 21-day EMA lining up right.
It's going to be an important earnings to see which trend it goes with. Now that we get a lot of that story, I think has been understood about cleaning up the bottom line, but still no top line growth. So good stuff, a good set of interesting companies for sure, even in the down. Jerry Horn, great to see that. We'll come back. Then get an update on the regional banks as regions continue to get hit.
I remember when I first started and we would experience turbulence, I would watch the flight attendants. They're not nervous this time. Financially, I'm a flight attendant in that situation. The relief that comes over people once they know it's got a guide to help them through, I definitely feel privileged to be in that position.
Trading the trending names every day. It's fast market. Ready for you, ready to go. I'm Kevin Hicks. Catch me at Fast Market.
All right, so just one of those days. A slide for the week. Just grinding lower. Just feels like we might just bounce around in this area for now. VWAP is still overhead, drifting lower. Can we get a rebound back to VWAP?
Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver.
Looking for a bounce right in this area. All right, a nice bounce so far.
Regional banks are getting hit after RF is down post earnings. Leaders financial ops caught. Take us through it.
Yeah, not only did they miss earnings and disappoint on that front, it's really how they missed earnings, Oliver, that I think is the story. Let's look at some of the numbers here. EPS comes in at 49 cents, well below the estimate of 58. But more importantly, from my perspective, what I'm following here is net interest income, 1.3 billion, estimate 1.33 billion. Um, Provisions for credit losses, 145 million versus an estimate of 135. They also made a little bit of adjustments to their guidance going forward, but they fixed their confidence a little bit as well. They see adjusted revenue going forward up 5 to 6% versus a prior reading or guidance of 6 to 8%. Non-interest expenses seen going up to 9.5% of growth versus 4.5 to 5.5%. But I think all of this, of course, would lead to a disappointing stock performance today, but maybe not to the extent of its worst day since March. I think looking at it in the view of
All right.
assessing the financial
Sorry about that. Thank you. Okay, we continue to drift lower. The more we drift and grind, the more probable is we're going to test that 42.25.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage checking and moving funds between your accounts is easy. Cash moves to your brokerage account is available in
Wow.
seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m.
Next support coming into view.
Get each and every angle, the whole picture, everything comes focused on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network.
Daily live exclusive.
All right, continue to move lower.
Broadcasting 24/7 from the studios in Chicago.
And from the heart of Wall Street, the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond,
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market
All right, some short covering. Sounds like some shorts.
day. It's time to look forward
Find the next track.
from every click to every tick.
There's no fear of missing out on Next Good Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network.
Okay, still feels like bear flags.
1 p.m. Eastern. Only Schwab Network.
Good morning and happy Friday. We're 90 minutes into trading day. Welcome to Trading 360. I'm Caroline Woods, live from the floor of the New York Stock Exchange in for Nicole Catalini's course. Let's kick things off by talking about what's coming up on today's show. We're going to spotlight the latest in AI trends and what's ahead when it comes to AI monetization. Our instructor is cognizant after the stock got an upgrade at Citi. Our panel will examine the state of the housing market as interest rates continue to creep higher and higher. Before we get to all of that, let's take a quick look at where the markets stand on the final trading day of the week. We are seeing red arrows across the board. As you can see, the NASDAQ, the biggest loser today, down about 1.3%. Actually, the biggest loser on the week, down more than 2%. The Russell, not too far behind it, down about 0.7%. Meanwhile, the Dow only up about 0.5%. That's 155 points. Healthcare and staples, the only sectors not in the red for the Dow. American Express, of course, the biggest drag. We'll talk about that in just a second. Meanwhile, just taking a quick look at the S&P 500, it's down about 1% right now. Energy, the biggest drag there. Now let's check out some of the futures products. We are looking at a Bitcoin, which is higher. It's still trading below 30,000. Meanwhile, the dollar essentially flat. Gold higher today as well. Maybe a bit of a safety play there. And oil is up about 1%, trading around 89.25. Before I look at some of the top moving stocks in today's market, I'm joined by Jenny Holmes.
All right, we're just above 42.25 now. Can we just get that out of the way? Get her done. Okay, volume's still been pretty negative, bearish and elevated. Let's see. Let's take a look at the US 10-year. That did drop off, so we probably need to see a bounce now. Need to see a bounce. All right, looks like we're going to bounce. Looking for a bounce now. Okay, looking for a bounce. Mm-hmm. All right, the 10 years dropping. Okay, looking for a bounce. Looking for a bounce. Can we get a bounce now? All right, let's go for some calls maybe. Monday. Okay, we're starting to push above some of these levels. The 10-year is dropping off. Okay, we got 420s, 426. We got calls starting to get bought. $10 years still looking for lower. $10-year peaking. Watch TLT. That might be a trade there. TLT. Looking for a return trip. 10-year dropping. All right, VIX is turning over.
seen 525 basis points in hikes over the last 18 months or so. That's not going to go away anytime soon. Inflation is continuing to be better. Consumers not growing as badly as it was.
All right, if we start to reverse, and the money puts are going to start monetizing.
This month we had the reintroduction of mandatory student loan repayments. So really, it's sort of death by 1,000 cuts. The consumer has really outperformed in 2023, but we're looking into Q4 and into Q1 of next year. We think that's going to slow. I think there's going to be a bit of a pullback.
But you say it's short and shallow, so what makes you think deeper and more aggressive in terms of the impact?
Well, one of the really sort of pillars of the economy, really this year and last year, and we think next year as well, is going to be the labor market. We're not expecting to see the labor market deteriorate significantly. Companies have a very hard time recruiting workers this year and last year. They're going to be very reluctant to hire. It's an education. We're seeing a softening of the labor market. We're not going to see this fall apart in the way that we did during the financial crisis, or really during the pandemic recession either. So that's going to end we're thinking going to put a bookend to the recession probably at the end of the second quarter of next year to keep it from becoming too severe.
So the jobs market likely to remain resilient, but you mentioned those student loan payments resuming as of this month. At what point do you think we'll start to see the impact there, and what will the overall impact to the broader economy be, given those new bills added each month?
Sure, I think it's especially important going to impact the younger demographics in the U.S. People who are paying down. I think it's going to start to really weigh on the economy.
No follow through, no bounce yet.
Into the holiday period, but I think again, combined with interest rate environments, dissipating pandemic savings, I think we're really going to start to see the pullback probably at the beginning of 2024.
And we are seeing some progress on the inflation front, though we still are well off the Fed's 2% target. What does the path to getting there look like, and what's it going to take from the Fed? Does it need another hike to get closer to the 2% target?
Sure. I mean, the chief sort of variable in this equation is time. The monetary policy that's already been implemented needs time to weigh on the real economy.
All right, let's take a look at tick. All right, tick is still drifting lower. We don't have a turn yet in the short time frame. Trying to turn. Tick is trying to turn. It'll turn if institutions start buying and stop selling so much. All right, they're still selling though. All right, looks pretty ugly.
In December. In terms of cuts, I don't think that the Fed is going to flinch. Powell has been pretty consistent in what he said about being willing to reserve some pain on the U.S. economy. If we do see a bit of a pullback, I don't think that he's going to, and his colleagues are going to meaningfully change monetary policy to evade, a softish kind of recession in early 2024. They're very focused on countering inflation. So until we start to see
Zero hedge with a sense of humor.
I think FOMC is going to be really reluctant to change course.
All right, really good breakdown for us. Eric Lund, Conference Board, thanks so much for being here.
Thank you.
Really appreciate your insights. Plenty more to come on Trading 360 next up. The big three.
The 10-year, we need to see the 10-year continue to drop off. This was a March higher for the entire week. So while I'm not expecting it to just peak on Friday because it's Friday, it is an OPEX. So we're watching Looking for this to drop off more. All right, let me go out to, let me go to the daily. Okay, 5%. 5% daily. Zero hedge. He's so funny. Um,
There's no place like the New York Stock Exchange. We got you covered, the biggest stocks, the biggest trends, all the market moves. The watch us with me, Nicole Easy, 2 p.m. Eastern on Friday. A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on next transaction. 1 p.m. Eastern, only on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades and full hour of trading. Uncovered news. Catch me on Fast Market. Weekdays at noon on the Schwab.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on Schwab Network. My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a year. Other guys were charging $400 or $500. He just didn't want to do that. He's proud of the price of just charging. My dad instilled in me always put people first. Be proud of offering a good product at fair price. I think he'd be extremely proud of me.
Welcome back to Trading 360. I'm Caroline Woods in for the Colcetta ladies. It's time for the big three: free stocks, free charts, free trades.
all right, need to keep dropping here. We're still no follow through. We're just sitting down here. We need to have a nice rally to get these puts to monetize. The fear is that we're going to go down and test 4,200, 4,225.
Bottom line is that if we're talking, a trade period, that you could buy it here, you give it about a point and a half.
All right, what are you doing? What are you doing? Bitcoin. Bitcoin's looking pretty decent. I'm not gonna make any verdicts until I see price action higher. But we're getting close to 30,000, so that's good. We tagged 30,000 this morning and reversed. One more drop. S&P, one more drop. What are we going to do here?
The bonds are going the right way and the dollar's going the right way, meaning that the bonds are going to higher price, yield is down slightly. And the dollar's been, coming down for quite some time. And, so, we'll see how this shakes out. But that's to the free trade.
Really? Dollar's been coming back?
That's where I'm at with this, Caroline.
Yeah. I mean, I can see the dollar's been fading. but it was at 107. Yeah, I see his point. I see his point. The last day of September into last trading day of September into October, the dollar started fading. All right, so that's good. That's good. Let's go take a look at the dollar. Okay, so this is the chart that we've been watching since late 2022, late last year, when the markets bounced. Okay, so dollar pulls back, the indices bounce and continue to follow through as this drifts lower into the end of July, which was the peak in the highs in the S&P. We break out into August, S&P pulls back. So far, previous red arrows up at the highs have led to led to consolidation in the dollar. Looking for the dollar to roll off a little bit, but it's not happening yet. So it's just sideways. That doesn't really tell me a whole lot. TLT looks ugly, but it's an inside day. So the rule on an inside day, if it stays like this, is take the direction of the follow through. So Monday would be a follow through. Do we see TLT higher or do we see TLT lower? It all depends on how this closes. Inside day, spinning top, or doji would be better. Looking for shorts to cover down here. If they start covering, puts that are in the money are going to want to monetize. They're not going to want, especially 0 day that expired today. They're going to want to capture that profit. For now, they seem to be a bit greedy. They're not following in line and covering yet. So looking for SPY to bounce here. Can we get a bounce? What's the Qs doing? Qs really need to see IWM do something. IWM and biotechs. Managing a bounce. IBB is flat on the day, bouncing above and below its VWAP. Let's take a look at IBB, biotechs. Let's look at junk too. Junk usually leads. All right, so junk is an inside day right now. 921.50 have all turned down, so that's not good. The 200 days peaking. This is one of the things I've been looking at thinking, okay, are they going to rally into November, December? Or are we going to be disappointed again this year because everyone's thinking recession? My thoughts are that, you should be reducing risk wherever you can. Collect more cash, because if the worst scenario plays out, we'll get good entries at lower prices. If the best scenario works out and we bounce, then you'll be able to take some profits off and de-risk into strength, if that makes sense. At the moment, I'm looking for reasons to think the bulls are covering, or excuse me, the bears are covering. Sometimes my lips move before my brain catches up. All right, IBB. What else? Bitcoin. Bitcoin's helping. That's a risky asset. I'd like to see more. I'd like to see more. IBB at a low, LABU at the lows, and XBI. All right, so looks like we're going to move a little bit lower.
Consolidating and forming one of those ranges I talk about, right, where we're overlapping and rotational. And as I look, you can see the two phases of development playing out pretty well and easily identifiable here.
We don't have a bid yet. We don't have a bid.
We can establish that we're in a trend of the
AMD.
Right? So we're looking for a breakout below this 123 level, the lows that we've seen over the last couple of weeks. High conviction and downside, then transitioning into this horizontal phase.
We're so extended down here at the low. I hate to see this drop off again, really bigly. Looking for a bounce. Nothing yet. The dollar. Dollar's really, really persistent.
Last fall, if you remember, the beginning of this year, we saw the retest around 90, 95 in March. But here you can see there is a value that formed at lower and lower levels. So again, this is kind of exactly what the bulls are looking for. Sort of the mirror image of what we were just talking about in terms of what we're looking for as far as the bulls to step up.
Okay, it's still showing weakness.
Right? The bears kind of flexing the muscle right at the key area that was significant for them to hold that 150 area. And you can see here
The dollar. US 10-year. Still dropping. US 10-year. So this selling here got to be dealers and people with in the money puts negotiating handshakes for now, because the 10-year is still dropping. Not the only reason for a bounce, but looking for a bounce. SPY's at the 200-day? Okay. SPY the 200-day. We tested it. Do we overshoot it? That's my guess. We overshoot it, scare even more people. VIX spikes. VIX is pretty tame, all things considered. VIX is pretty tame. All right, we've hit several downside levels. All right, so we're at the 200-day. Now what?
Right now, and this is going to be everything's contingent on the S&P out there today. That's the bottom line. You know, that's what it comes down to. We're at these lower levels. You know, the real question is that can they spike the S&P down and get some fear in the marketplace? Because the only way this market actually can go up, or does go up, is that you get fear in the marketplace first, and then the baby flips. So, you know, it's been a one-way trip on the way down right from the open. You know, if they get more fear, you know, the bottom line is then you might have a shot of a turnaround. But if the fear is not there, you know, I don't expect this thing to turn around.
Okay. Ben, longer term price target for Meta on Wall Street, 375.
All right, that 200-day. All right. Okay, we're dropping lower. All right, ES is starting to build. Hold on one second. Let me get this.
If we wanted to kind of pull out that really fine-tooth comb, we could establish that this pattern's played out a couple times even within this larger range that we have. Again, we've got an easily identifiable upper extreme, 330, got a lower extreme, 275, and look where we are kind of hanging out just above that range here, right around that 300 level.
All right, so now if we put in the 200 EMA, we did this exercise last time we touched the 200-day. All right, so 200 EMA. We're already below the 200 EMA. RSI pointing down, MACD's crossed, stochastics almost probably by next week will be oversold and potentially ready to turn. Tell you what, this grind is just something else. Do we go? Do we go down? Do we go? Mm-hmm. 10-year starting to bounce. All right, feels like we're going to bounce. Okay. Excuse me. So you can see this price action is really lethargic, just grinding lower. You try to take a long. There's no reason to take a long until we take out at least 42.42, 42.41, 42.40, something like that. We got to take out these two red candles right there. Nothing yet.
Every morning, every trade, always live. Expert earnings and analysis. Insights, every changing trend in markets. Available any.
Meantime, Solar Edge on pace for the worst day ever, hitting the lowest level since 2020 after warning about this revenue miss. Now, Petra Stevens has more on that move and what it might be telling us about the industry.
That's right, Carl. Shares are tanking 31% after the company said Q3 revenue at the midpoint will be 20% lower than prior forecasts, with Q4 also impacted thanks to what the company said was, quote, substantial unexpected cancellations from distributors in Europe. Essentially, the company's ramped up output to meet what had been very strong demand, but that demand has slowed, meaning there is now a big excess of product. But perhaps even more importantly, SolarEdge said gross margins during Q3 will be between 20 and 21%, down from initial forecasts of 31% at the high end. The company didn't elaborate on the numbers.
VIX starting to spike again.
And Wall Street is unimpressed. Goldman, B of A, Deutsche Bank, Roth, MKM, and Oppenheimer all downgrading the stock. And pretty dramatic price target cuts as well. Goldman taking its target down to 131 from 254, with B of A going to 65 from 146. And we've been hearing for several quarters now that the solar industry isn't looking so hot as rising rates make residential systems more expensive. But the issue here is that the bottom keeps getting moved out, meaning, Carl, that there is just not a lot to like in this space right now.
It has been challenged for a while. But thanks, Pippa Stevens. Let's get a news update this morning with our Bertha Coombs. Hi, Bertha.
Hey, Carl. The White House just requested more than $105 billion in aid from Congress to support security needs in Ukraine, Israel, Taiwan, and the U.S. southern border. $61 billion of that request is slated for Ukraine. President Biden made the case for aid in his Thursday night address to the nation, saying the money will help keep
All right, looking pretty vulnerable here.
President Trump's civil fraud trial threatened to put him in jail this morning for not removing a disparaging post on the Trump campaign website about his law clerk. He called it a blatant violation and that serious sanctions for jail time could follow. Trump's lawyer, Chris Kye, said it was inadvertent and apologized for the error. And jury selection is underway in Fulton County this morning for the first defendant to face trial.
I hate politics. Both sides of the aisle. I hate politics. What makes a person want to get into politics? I guess the power thing, right? And not having to work the rest of your life if you stay in politics. Just weird. All right, Bitcoin's still hanging in there. It hasn't moved much. I keep thinking that this is going to follow through. I added a little bit earlier this morning. Thinking that we're going to continue to make higher highs and higher lows on Bitcoin. So let me see here, Bitcoin. Here's Bitcoin. I haven't marked this up in a while, but you see what we were thinking about at the time. We had this descending channel. We came up to a significant level. We based out at 31,000-ish, drifted lower, held this low, the June low. Now we're making it back up to 31,000-ish, plus or minus. If we get up there, I'll reassess. For now, though, it looks pretty good. Making higher highs and higher lows. The candles are getting bigger. The ATR is turned up. You see that? Average true range, average true range is starting to turn up on Bitcoin. I'll go over what I just said because I didn't realize I didn't have the right tab on. So we had this descending channel. We popped up to 31,000 where we topped out back in April. We topped out in June and July, drifted lower, but held this low. So really, let me just update this. I'm listening to the markets. Sounds like we're going to bounce. All right, so I'm looking for this range at this point. Okay. All right, so we had this first. Okay, now we had that low. All right, so we got a couple of levels there. RSI continues to rally. Volume is picking up. Okay, stochastics is turned. And we see price action, we see volume, or rather daily range starting to pick up. All right, so that's important. That means that more buyers are coming in. So we'll probably sell around 31,800. All right, starting to turn. Okay, so let's go back to S&P. This is just a slow grind. Slow ride. Slow ride. Take it easy. All right. All right, so we had a sell signal this morning right at the open. We continue to grind lower. VWAP is still overhead, so it's still a bearish day. The thoughts are that if we bounce back the VWAP or 4250, we'll look to take a short there unless we continue to rally on volume. Right now, volume's starting to pick up down here. Volume's starting to pick up.
Mostly weaker for the week, but heading on a high note here. Note from RBC's desk grabbing our attention this morning. The bank says that the hype over GLP-1 drugs like...
All right, so the Bitcoin stocks like Mara, those are drifting lower. So it's just Bitcoin itself. Feels like we are at the low. Maybe we'll get a little bit more. Okay, we need to see puts monetized. That'll happen if we start to rally. Yeah. Slow ride.
Mainly because of macros, right? Putting pressure on volume recovery, putting pressure on pricing and promotional activity. But at some point, as stock analysts, we have to say enough is enough. We think we've kind of reached the bottom. And when you really think about some of the real world application of what's going on with consumers and these drugs, I think the market is just pricing in something that is a lot more onerous, right? And the reality is, our biotech analyst Ryan Abrams did a great piece yesterday talking about how the real world interaction with these drugs is less than what we saw in the clinical studies, right? And I think what a lot of investors are doing is using the clinical data and output as a benchmark on how the overall impact would be, but we're seeing something very different in the real world.
Does that mean that your favorites right now are centered within food, within beverage, or maybe just relying back on some of the things that have happened in beauty?
Yeah, Carl, we've been very cautious on packaged food space for most of the year, and we remain so outside of Hershey. It's the only outperform rated name that we have, in addition to Utz, which is a snacking company which we recently initiated on. So those would be the two names that we have outperforms that I think would benefit from a abating headwind from this topic. But we've always been very, very bullish on the beverage space within our coverage since the beginning of the year. So Constellation Brands has been impacted, Coca-Cola, even Keurig Dr. Pepper, and Duckhorn, which is a wine company, because some of the beverage alcohol names have been affected by this theme.
Because anyone you talk to on these drugs, Nick, say that they drink less, they don't crave sugar, they don't eat as much. I mean, that doesn't bode well for these companies.
Yeah, and it's a great point, Sarah. And the point that we've tried to make is, first of all, it's a very small percentage of the population right now. So, you know, for those that believe there's an impact.
All right, looking for
these drugs, I really
looking for some follow through. All right, we're starting to take out previous peaks. Some traders will take these as signals as we reverse off of some of these levels. That red candle there, this red candle just overhead at 42.40. As we push higher, if we take out some of these levels, we'll start to get some buy signals. We got a buy signal here. Volume picking up. Volume picking up.
I have seen this happen many, many times, and it's created such dislocation that it would be kind of a shame and a missed opportunity not to take advantage of it when you think out the next 6 to 12 months.
Nick, I wonder if you can make sense of what Walmart was trying to say about the impact on basket a couple of days ago, and then what you think when you see some of your sell-side colleagues at other firms try to quantify the impact on gaming or apparel or the size clothes we're all going to buy.
Yeah, so it's, you know, hey, we all the beauty of this job.
All right, so this is a slow ride right now. Just waiting.
Look, on the Walmart thing, and I spoke to my retail analyst, Steve Jeanette, here at RBC, covers Walmart. You know, what they basically said is, look, they're seeing some calorie reduction, but they're also seeing the basket increase as consumers are looking for, you know, better for you products, right? So even the big quote that's been used to say, oh my God, Walmart is saying people are eating less is not totally consistent with what I think the message was, which is people are just shifting around what they're buying. So that's on the Walmart comment. And again, like I said, of course, people on these drugs are losing weight and eating less. That's the point, right? But it's such a small percentage of the population that I just don't understand how we can come up with a thesis that the current trend impacted by this.
Because the bigger picture, Nick, is that there's an obesity crisis, and those numbers are very big in this country. And
All right, so we're getting a follow through. Now watch these candles over here on the left as we take out these pivots. As we take out these pivots, we're going to have some shorts covering and new longs coming in. We got a buy signal. Volume is picking up.
Yeah, and that's another great point. And again, let me be very clear. I'm not saying that these drugs don't present some kind of risk long term, or it's not important for society. I get it. All I'm saying is that these stocks have reacted so much that I think a very bearish scenario is being priced in today, which may not be the case when you look at kind of how these things typically play out. Now, the important thing about incomes and demographics, when you look at the buyers of a lot of the categories and brands my company sell in consumer staples, they tend to be more middle and lower income. Whereas I would suggest that you have much more higher income consumers buying these drugs for weight loss because they can afford the out-of-pocket expenditure, right? So you even have a sort of a mismatch in terms of the actual buyer group for my companies versus the people that are actually taking these drugs.
Nick Modi, certainly interesting as someone's going against the wave and selling your consumer staples on this idea. Thank you for joining us with the note.
You bet.
Nick Modi of RBC. Haven't seen that happening in a while.
Still to come this morning, B of A raising its third quarter GDP estimates after what they called a sizzling September. The firm's senior U.S. economist going to join us ahead. Plus, watch the regional banks today. Pretty dismal action at the open as some of these get slammed. The KRE is having a very rough day. Some of these percentage decreases, especially in regions, something to watch. We're back in a minute.
No follow through yet. No follow through yet. All right, so, man, this is just taking forever. If the 10-year continues to watch Walgreens bouncing, moving a bit higher. If the 10-year can manage to drift lower, it'll just a little bounce. Now we're rolling over again. Imagine a lot of people are watching too closely. I got to believe that 5% is going to hold prices back for a while. That said, still showing weakness. Nvidia starting to bounce. Netflix starting to bounce. Okay, Netflix has a catalyst. About 10 firms have upgraded. We've got subscriber growth dramatically increasing, and Netflix management increasing prices, subscription prices. I'm not happy about it, just noting that Netflix reversing there, Netflix. It's a slow go today. Netflix. Bitcoin trying to do something. Okay, Bitcoin trying to do something here. All right, I'll keep an eye on that. Netflix. Netflix looks like buyers coming in. Meta. Okay. What I would really like to see is, number one, that if we start to rally, that it's going to be mostly puts monetizing that's going to move the market. Some people will misread that. But if we bounce at the 200-day, got a lot of things going on. Almost oversold on stochastic. MACD has crossed. So that needs to pop back up. I don't know, it's very risky. It could go either way. All right, starting to get a bid in the market. Starting to get a bid.
I was trying to sort of dissect earlier on the show why economists were so wrong, including the Fed, about Q3 and this acceleration in growth from the U.S. consumer. And I pointed to excess savings. Everyone thought it would run out. And I mean, if I one estimate, Nancy looked today and said that there's still
Okay, what's Russell doing? IWM. Russell. Literally, what's Russell doing with the Russell? Okay, high tick alert. High tick alert.
Given the strength in balance sheets, and again, it's broad strength across the various categories of household assets, consumers can probably save less on a flow basis going forward, which means they can keep spending. So whatever number of excess savings we come up with doesn't really matter. The point is that the outlook for spending still looks pretty good, except these concerns around student loans. Because of wage growth, because broadly since the start of the pandemic, financial assets.
All right, Netflix looking pretty good.
Liquid assets still available, and home prices are up. So overall, balance sheets just look pretty solid to deal with whatever headwinds might be coming our way.
You mentioned earlier, Oxford, December market dropped to a new low of 25. You still think he left the door open enough?
Apple turning. Okay. Looking for those puts to monetize.
The economy slows down or inflation picks up. And I think the momentum in the economy is enough that they'll be concerned enough about continuing to strengthen growth, which will lead to inflation, and they'll do that final hike.
You don't think a 5% 10-year deal would be the trick?
That's what they're hoping for. And it's certainly a possibility. So we do see significant risks, to be fair, that they don't do that last hike. And they are concerned about financial tightening. They notice that it's happening in real rates, it's happening in term premium, and so they might have just done enough.
When we talk to banks, tell us the credit cycle's manageable, provisions are in line with prior expectations. Are they whistling past graveyards? Do you see us on the cusp of some cliff?
We don't think we're at the cusp of a cliff. Things should definitely slow down. We are still worried about credit tightening, particularly given higher rates. But consumer balance sheets and business balance sheets are both pretty well set up. The problematic balance sheet in the economy right now is the government balance sheet, but that's more of a long-term problem.
What's the significance of him pointing to term premium, Powell, as a reason for rising rates?
Right. So what he explained was that this is not an endogenous move in the sense that it's not just a function of Fed expectations and then the Fed doesn't.
All right, so all the FANG stocks are turning too. All the FANG stocks are showing short covering. Okay, so
Even if the Fed doesn't hike more, longer-term rates are likely to stay elevated and continue to tighten financial conditions.
A lot going on. We'll see what we get next week. Aditya, thank you. Good to see you. Thank you. Good to bother you.
And up next, a look ahead to big tech earnings, Microsoft, Alphabet, Meta, Snap, and Amazon, which are all reporting next week.
And speaking of tech, watching Apple here on pace for a 6th straight day of losses. That is the longest decline since 8 days in January of last year. We're back in a moment.
all right, Netflix. Netflix still going. Netflix with a nice move through here. Okay, Netflix cruising now. Looking better than the other. Tesla is starting to reverse. Watch Tesla here. Tesla's starting to bounce. Yeah. All right. So technically still a bear flag, right? Still a bear flag. We got to take out some more of these levels. 4250 is the next level overhead. Then you got VWAP. That's where we're going to know. That's where we're going to know whether or not they want more, if they got more to sell. I just got a feeling all these puts are going to start to monetize and we're going to run. The odds are for a run back up towards VWAP now. $43.50, then VWAP. All right, so tick cumulative crossing too. Tick is about to cross.
Good morning. So for the mega caps, it's all about the promise versus the economics of artificial intelligence. Throughout the first half of the year, the hype was, of course, a benefit, carrying the Magnificent Seven to new highs. But there has been a market shift in the second half where the cost and unclear monetization feels like more of a risk to margin improvement. Next week, we will get 4 of the mega caps. You mentioned them: Microsoft, Google, Amazon, and Meta. They stand to benefit the most from AI, but they also stand to lose the most if they can't prove to investors that their strategies are working. On top of that, they're contending with declining treasury yields that threaten to dull the allure of equities as a whole, even if the mega caps are seen as just as defensive plays these days. Now, Microsoft, let me go through them. It has OpenAI, Azure AI integrations, and its 365 Copilot that should boost financials. But last quarter, CFO Amy Hood, she threw cold water on any near-term impact, saying that the growth of AI services is going to be gradual, and monetization felt most in the second half of
Okay, S&P so far, volume looking pretty good.
2025, i.e., away. At the same time, it's got to spend more now so that investors will want more details this quarter, or at least more Azure growth in the meantime. Now, speaking of cloud, that could also be the single biggest factor for Amazon this quarter. It's where they've been putting all of their AI efforts, and the street is looking for conviction that AWS growth has finally bottomed. Also to note, Amazon has not raised its CapEx outlook like other mega caps have, so they could do that this quarter, and that could be another point to the AI category. Amazon's seen as behind Google and Microsoft in the race, so it's going to catch up. That may mean spending more. Now, Google, it may be the most straightforward.
Okay, Tesla, nice reversal, Tesla. Tesla coming off the low. Okay, so we're going to run into VWAP. See what happens if VWAP. Volume looking really good on Tesla. Uh, 214.
On what should be some strong double-digit revenue growth. So there you have it for the biggest names. Well, I mentioned earlier, one of the risks with these, even the warm hug of Google, is the macros. And it always feels like it catches investors by surprise when there's macro weakness, but they're global companies. They've got currency exposure, and some of them, like Google, are tied to basically what the economy is doing and how they're spending. Where are they right now as far as monitoring any slowdowns, and what's the risk? Good question. Google, if we take it that business, its biggest business, that make up the majority of revenues, it's actually been so much more resilient than anyone else out there, including Facebook or Snapchat.
Tesla.
Well, and I would just say all of these names, they're GARP names, growth at a reasonable cost. They're not growing huge amounts so that their earnings are so much in the future that interest rates and treasury yields make them a little bit less attractive in this environment. These are really safe defensive plays. I keep going back to that because they have these huge cash piles that when interest rates were closer to zero, they look like liabilities, but now they're really
Tesla.
collecting money and earning money risk-free.
Oh, you're not.
So even though they are businesses that sprawl and they're subject to U.S. dollar strength, they are sort of havens of safety in a way also because of those cash piles, because of their moats, because of their pristine balance sheets.
Yeah, also interesting too. Interpublic had earnings.
All right, sorry about that. Sorry about that. I don't know what happened. Glitch.
Meantime, anywhere on any device for free.
All right, so it's just a little bear flag for now. Let's see how greedy they are. Most of the FANG stocks have bounced. All right. Where's my meta? There's my meta. Okay. Meta bouncing. Everything bouncing back to VWAP. S&P.
For billing inquiries or to make a payment, please press 3. For questions regarding capital credits, please press 4. For the HTC employee directory, please press pound. To repeat menu options, please press star. For new service, questions, or changes to existing service, please press 1. For technical support or repair, please press 2. HTC appreciates your business. All calls are monitored.
I'm here with I'm just calling the cable company to see what's going on.
Solar stocks under pressure today because of Solar Edge cutting guidance yesterday after the close. Let's bring in Jenny Horn, markets correspondent here on the network, to help us break this down. Yeah, Solar Edge down nearly 30% and putting a drag in this whole sector, Jenny.
Yeah, and I will say that this stock has also underperformed even with today's 30% move to the downside, which actually puts it close for its worst day since going public back in 2015. So even though we are seeing sector weakness, the story is very Solar Edge specific. They slashed their third quarter outlook pretty significantly, now expecting their revenue to fall between a range of 720 and 730 million versus its prior outlook, which was between 880 and 920 million. So rather significant. Their CEO did say late Thursday that during the second part of this third quarter, they experienced some substantial, unexpected cancellations and push-outs of existing backlogs from their European distributors. So they did have at least some reasoning. It wasn't completely unprecedented, but they do still now expect a significantly lower fourth quarter revenue as inventory destocking does continue. So they don't only expect the third quarter to be disappointing, they expect that to also linger into their fourth quarter. You can expect these third quarter results November 1st, but what we know is the street really didn't like this news. Like, we're seeing so many different analysts across the board reduce their price targets, reduce their ratings, and what's so significant to me is the size with which we're seeing some of these price cuts. I mean, Goldman Sachs down here neutral to buy.
All right, I got a technician coming out. He said that there is a signal issue in the area, so just keep trailing stops on, just in case the markets do something weird. Okay, so most of these tech stocks have bounced. Another reason to have trailing stops, not just mental, but actual stops, in case the markets do some kind of crazy reversal on you and you lose service or whatever. I mean, I can do things through my phone. I'm pretty adept at that, but had 2 dropouts already so far this morning in the last 10 minutes. So, all right, so we're seeing a little bit more selling. We thought that if we got back up to VWAP or near 4250, you might be able to take another short there, take another shot at it. So far, the FANG stocks are trying to hold up.
Low tick alert -800.
Yeah, Jenny, talk about ruining someone's weekend. This is a big move in this name. And Jenny, we could probably do a whole show just on this, right? This industry, this sector of the U.S. economy got a ton of cash thrown at it from governments.
Oh boy, look at SEDG. Solar Edge down 29%. Wow, that's pretty ugly. Cut your position in half, 130 down to 75. Wow. Ouch. I'm very interested in ExxonMobil. Interested in a position in ExxonMobil. Let me just check the options on this because I want to sell premium around Exxon position. And the main reasoning behind I have to do more research, but the main reasoning behind Exxon is that whole acquisition of Pioneer and all of that shale acreage that Pioneer has.
only signal I can give is that we are seeing weakness collectively in the solar space. Perhaps then this does lower the bar for their earnings when we get those results November 1st. Any sort of up.
Be nice to see some good news for a change. All this negative news. Congress can't vote for a speaker. Markets lower. Very interested in ExxonMobil. Now let's look at the weekly. Weekly is still in a range, so I might have to wait on that for now. There's a possibility that Exxon gets back up to the highs, but there's an equal possibility that it moves down to the lows. So volume's starting to pick up. Maybe there's something going on that we can trade off of. ExxonMobil. Let me look at the options. Options. All right. So the 115s are just overhead. Those are going for 485. Now let me look at Apple. By comparison, Apple, the at the money call for Apple, just out of the money, is going for $9. So it still makes sense to trade Apple. I don't know. I just Apple with earnings coming up. I reduced my exposure this morning. I sold 200 shares of Apple.
It is, but it's not what he talks about are consumer loans, and that's correct, right? And we see some sort of degradation of consumer credit, but also the cost of capital. Goldman came out today and said cost of capital is 9.5%. The weighted average cost of capital, which is what every buyer, every institutional investor, and by meaning investor, I mean CEOs, companies, that hurdle rate you need to get over to make an investment in CapEx in another company, M&A, is over 9.5%. For 2022, where we saw none of that activity, relatively speaking, it was 8.5%. So we've gone up substantially. So number one, it's freezing corporate behavior. You heard Bostic, he talked about the massive tidal wave of refunding that has to happen from commercial credit.
Well, why do you think, for example, we showed the KRE and the KBE today are getting hit especially hard. Regional banks, real estate, for some of the very reasons that you're talking about, that threading the needle for Powell, to me, boils down to this fact: it's choking demand to some respects, because he says the whole problem with everything going on right now, there's too much demand.
Right.
So they're trying to choke off demand, but at the same time, worried about they can't afford to have a credit event. Well, I mean, there already was one of some respects when it comes to.
All right, can we get a higher low? Can we get a vote for a higher low?
You can't have more substantial credit that causes even more consternation to them.
Look,
For them.
the issue with SVB, it was blown way out of proportion in terms of its relevance to the financial system. We're not going to have a credit event in the financial system. We may have it isolated because commercial real estate's on the balance sheets of regional banks.
I don't know, it just feels like we're going to go down and test it, right? Go back down to the lows. We need a higher low, like quick. We're between 42.25 and 42.50. We're at standard deviation 1 minus 1 standard deviation from VWAP, VWAP overhead.
I don't think we're going to make a credit event. Absolutely not. We're going to have to disagree on that. If it were JP Morgan, if it were BofA.
You know, I was thinking this morning as I was getting ready to take my son to school. You know, if we did have a market crash, if you will, I'm not saying that we're going to have one, but I'm thinking to myself, if we did have a market crash, a lot of that capital that the government printed, people who are long and stubborn, a lot of that money is going to evaporate. You know, that's just in the back of my head, um, annoying thought, a gnawing, GNAW, gnawing commentary I'm having with myself that, you know, I want to reduce my exposure into strength, see what happens, you know, end of year, into next year. I'm talking about long-term portfolio stuff, because day trades I can get in and out. I'll be out by the end of the day. But portfolio wise, you know, we're at extremes. The other side of that coin is, you know, the whole adage that buy the fear, you know, when everyone else is fearful, you want to be greedy. And when everyone else is greedy, you want to be fearful. I don't think everybody's greedy right now at all. I think they're more fearful. I would think anyway, because we had a double pump. It looked like we were going to move higher. We had nice indication of buying off the low. Okay, we're back down to support the March low. We're at the 200-day on the daily regular S&P 500. Number of stocks trading above their 50-day and 200-day have dipped. Again, the 200-day is at a new low. So we need a washout on the 200-day first. I don't know. But it looked like we're going to follow through. Now we're looking for a higher low. Let's look at advanced decline, see what that tells us. Okay, advanced decline moving back down to minus 30. That's pretty interesting. Making lower highs, potentially for a lower low. That red line in the upper panel, that's the 200-day. Okay, so the good thing is today is OPEX for the month. So that relieves dealers of a lot of hedging, but we need to see a lot more puts and calls fill in. All right, there goes Apple. All right, we're starting to see. So the point I'm trying to get at is try to reduce your, I'm telling myself, try to reduce my exposure into strength. If you need protection, maybe you take puts. I'm also thinking, you know, sell covered calls, get some good premium. Let's see what the December. All right, so Exxon, the December, actually Apple, that's Apple, sorry. Exxon, the December calls are only $3. That's just like not even worth it. I'm looking for positions that I can sell covered calls where preferably earnings are behind us. You know, like Netflix. Let's see what Netflix looks like here. Okay, Netflix, not looking to buy shares of Netflix at $400 per share.
down further or pretty much the same.
Mm,
The debate is really about how long the Fed will hold.
Intel.
And that's
Got to look at some stocks that have high implied vol.
this morning talked about not thinking about cuts until sometime the second half of next year.
Okay, we're starting to make a higher low. Let's go back to S&P. Higher low. Okay, can we motor higher? As we start to push higher, more puts are going to monetize 42.50 and below, 42.60 and below, 42.75 and below. These puts are going to monetize if we start to rally.
All clear. Inflation's 3.7%. 336,000 jobs. GDP at 5.4%. What do you want the Fed chair to say in that context when he's trying to bring inflation down?
Yeah, I appreciate it, Steve. Thank
Sure.
you. Good insight, Steve. Who's my senior economics correspondent. All right, Shannon. The ball gets thrown your way.
Okay, let me get this here.
How are you feeling about the market?
Okay, that was my cable service. They said that there's a problem with the signal. Hopefully, we'll make it through the rest of the day without any glitches.
The Bulls need something to take their attention away from the 10-year and from the Middle East headlines. And
Gnawing, yeah, gnawing. Yeah, so see, somebody's listening.
is that just what the doctor ordered?
I think from the news cycle, it certainly is, but we can't discount the interest rates. When Josh talked about at the beginning of the show how important it is, it's the narrative of the market. For so many viewers, you haven't seen interest rates high. Even the expectation yesterday is, well, rates went up and even come down again, because that's what has happened lately. Steve talks about 6 months being higher.
Yep.
I'm talking about a year at least where we're going to have rates higher. And that's probably what higher for longer means. And
You have shares of Exxon, Sundog,
conference call, he kind of nailed it. He said, when you get 5% risk,
January 19th. Yeah,
it's difficult to get
the
lower
130s. January. Okay, so Exxon, Exxon. Yeah, so I might do that. I might go ahead and do that. Exxon. Thank you, Money. That's good. January. I would do something closer to the money. And as we approach the end of the year, I more than likely will be rolling that call up.
Our chart of the day is in that mix as well. We're back right after this.
Okay, I'll do that on Monday, most likely. Most likely do Exxon on Monday. Thank you, Money. I'm going to download that. Okay. Exxon, most likely. Start a position on Monday. Sell some premium.
High took alert plus 800.
Probably sell some short calls. and maybe a credit spread, put credit spread. Probably 115. All right, so we got a nice reversal so far. S&P heading back towards 4250. Initially, there was a pivot. You see this pivot over at 1030? Pivot. All right, so there's a level there. Level here. What happened to my arrow? Don't they have arrows on visual? How the hell do you add an arrow here? Anyway, so you got that pivot there. You got, oops. You got this here. We're coming back to the same spot. Okay, so this one right here. Okay, we got VWAP and these pivot highs at the same spot, 4250. So we need to get above 4250.
Yeah, absolutely, Scott. This is a company that missed on revenues and beat on earnings per share. But if you dig a little deeper, the earnings were excellent. The revenues were up double digits. They've continued to do that quarter after quarter. The stock's trading a little bit off of its highs, but this sell-off is certainly an opportunity. It's committed to a dividend close to 2%, but they've been increasing it by leaps and bounds over the past 3 years. So you're talking about a company that almost benefits from the exploration of oil more so than the price of oil. And we're not digging, we're not exploring, so they're putting new rigs up and they're going to make a lot of money. It's a stock that, on any pullback, that would be a buy low.
Get to your other move in a moment. But Josh, I think you owned this not that long ago, right? Didn't you have SLV?
Like 5 years ago.
That long? I thought it was more recent.
Scott, you and I have been together a long time.
Never mind. Cut his mic. Be back in a second.
All right, no follow through yet. Still basing down here.
10 years at best, at very best. Why do you consider this an opportunity? The stock barely off its high.
Yeah, because I like stocks that go higher.
Oh, so you're playing a little.
Well, I think this energy space is something that we've been really a beneficiary for a long time.
Is that good enough answer for you?
So, no.
Speechless. You left him speechless. Very few have been able to do what you did.
I own Chevron, I own SLV, I own ConocoPhillips. We got a surprise treat in the account the other day. ConocoPhillips paid a special dividend. We're expecting those same things from Schlumberger. I really think that it's a company that does have the ability to make higher highs.
All right, let's move along. You bought Caterpillar a couple days ago.
Looking for a higher high. We keep running into resistance.
I think that this is a company that has incredible opportunities. They crushed it last quarter, top line, bottom line. It beat every which way but Sunday. And we were looking for a pullback to own it. And now for the first time, I have Deere and Caterpillar in the portfolio. Now, I don't know that Caterpillar is not finished going down. I think there can be volatility here. It's a position that we're going to own for the long term. We initiated it and we'll continue to buy and hold this.
You write calls against everything?
We don't write calls against everything. We write calls very tactically. I did have a covered call on Schlumberger before earnings that we wrote last week, so it helped hedge the position I got today.
Okay, so you've been buying Coca-Cola for the last several weeks, and you're buying more of that too.
Yeah, I think it was oversold. There was a lot of talk with many of the stocks that have to do with sugar, fast food, anything that's bad for you. But thinking that with the obesity completely cured, we'll never drink another soda pop. And I took that as an advantage to go ahead and add to it. Pepsi had great earnings. We're expecting something similar out of Coca-Cola.
You know, I think we discussed a little bit of Lockheed Martin on closing bell. I think it was when you had started reducing the position. Now you sold the last little bit you had earlier in the week, and here we are talking about risks and geopolitics and war and all the like, and then you're selling out the rest of Lockheed. Why?
The price action was horrible, and if they do increase domestically, if they increase spending on defense, it's something that takes a long time to reflect in the bottom line of Lockheed Martin. We were wrong on that trade. It went down, and we got stopped out of it.
J.P. Morgan. So the banks, as we mentioned, after the initial post-earnings pop that many of these banks saw, they haven't been trading all that well. So J.P. Morgan, you rolled the call option out and down post-earnings.
Yeah, so this was a lot of fun. Heading into earnings, and we may do this with some of the tech stocks next week. We wrote a covered call thinking there was going to be anticipation of volatility. That's the great thing about the option markets. It'll tell you what volatility might be. It just won't tell you the direction the stock goes. So we wrote a call. We captured about a 90-cent profit in one day. We wrote another covered call, and as you mentioned, the stock's trended down. So we were going to close that out. It's just taking advantage of volatility surrounding an earnings season. And anyone can do it. You can supplement dividend income with cash flow from covered call over. It's a great way to, especially in a flat market, protect the portfolio hedge a little bit.
I love it. Thanks for sharing the trades with us and all of our viewers too. Let's get the headlines now with Bertha Coombs. Hi, Bertha.
Hey, Scott. The Israeli military said today it thinks most of the hostages taken by Hamas are still alive. An estimated 200 people were kidnapped on October 7th. They said more than 20 of the hostages are children and 10 to 20 are over the age of 60. An army statement said a majority of the hostages are alive, but added that dead bodies were also taken into the Gaza Strip.
Okay, looking for that higher low to print a higher high. Bears and bulls are fighting.
Faster than expected, with the country's nuclear weapons arsenal exceeding previous projections. The report warned that China may also be pursuing a new intercontinental missile system that could strike targets in the continental U.S., Hawaii, and Alaska. That report comes just 1 month before President Biden is set to meet with his Chinese counterpart, Xi Jinping. And the Army is accusing U.S. soldier Travis King of multiple crimes after he fled to North Korea. Documents obtained by NBC show that the charges include deserting, assaulting fellow soldiers, and soliciting child pornography.
Okay, thanks. Yeah, that was the other thing.
The border between North Korea and
Earnings 1027.
expelled by North Korea late last month and taken into U.S. custody. Scott, back over to you.
All right, Bertha. Thank you, Bertha Coombs. Coming up, our calls of the day. Analysts staying bullish on 2 big names. We'll find out what the committee thinks about that next.
Okay. Looking for S&P to produce a higher high now. We've hit this level. Hit this level twice. Just a little shy of it a few minutes ago. Got to get above this level right here. Come on, let's go. LATSGO. All these puts down here. Let me go take a look at S&P real quick. What's expiring today? Okay, so above this level. Okay, so 4250 has 17,000 contracts.
I think it's mispriced and going higher.
Why should like it? I do. I agree. It trades with the market, whereas CEO, since he came in, has just had such amazing.
At 4250, 4250. All right, so there's a lot of contracts there. Looking for that to monetize.
It's still a buy at UBS. You own that too, right?
Yeah, I think the call might be a little late. When it got down to 250, we brought it back up to a 5% position. I've owned it for 10 years. It's an incredible dividend grower. It gets up into that 290s. We're like, if this target's right at 310, we'll be super happy.
Josh, what do you think about McDonald's? I mean, Shake Shack's the way you primarily play.
That's really weird. Oh, you know why? Duh. I'm stupid. Dummy. That was AM.
I think if you own Toast, you benefit from just this bigger trend of people eating out more, whether it's casual.
All right. We have quite a bit trading right here at 4250, 7,624. 22.5. Okay, so 4250, 0 DTE, 4250. We've got 23,000 now.
From a Chili's or an Applebee's to McDonald's. I think that if I look at, being able to drive.
Okay, so we should see these rip if we can get above that. Today's expiration, PM expiration.
So I think you do need to be, you need to be a little bit more prescriptive in building this out. But I think it does really hinge once again on that, like what happens with the middle income consumer next year.
Yeah. All right, up next.
Okay, here we go. Here we go. Nice. All right, I'm going to test 4250. Here we go. All right, here we go. All right, shorts will cover. They'll keep covering. Puts will monetize if we're lucky. And we get through this area, not get rejected again. What you got there? Yeah, that's what you got. Yeah, same. Okay, cool. Yeah, the next level is 4260, then 4260, 4250, then 4260 puts LA. Thank you. Come on, get through here already. Come on, let's blast through this level. Can we do it? Sure trying. Come on. All right, the FANG stocks will definitely help. All right, Apple back to 174. Meta, Google. The other potential victim is Google. I'd like to buy some more Google, sell some covered calls. Google, of course, has earnings. So after earnings, we'll see what we have into the last quarter, into the fourth quarter. Google. All right, no, let me go here. Google. I believe they're on Wednesday, right? Google is reporting on 10/24 next week, so that's Tuesday. All right, Google reports on Tuesday, so that'll give us something to do, depending on what Google does. Okay, Bitcoin just fell asleep. It just hasn't done anything since 9 o'clock this morning. Basically moved up to 29,700, just sitting here 29,565.
And I think he was very reflective of where the Fed is right now, which is it's going to take advantage of whatever the market gives it on the tightening side. And it's an inherently ambiguous moment, right? Because you don't really know if you have to do more. And I think that the market doesn't know what to do with it because also the Fed's not the story right now. And it hasn't been for a little while. The Fed's only the story to the extent that they want to try and counter anything the market's already trying to do. So today, the stock
10-year, get that to roll over. That would be nice.
Concerned about 5% treasury yields as you can, and the sensitivity to every move in treasuries gets really extreme. You back off 5%, the stocks are still for sale right now, testing the low end of the range. It feels like you got a case of the Fridays again. Last Friday, we were trying to clench up ahead of the unknown.
No follow through yet.
You do see some of the generals getting sold. I think that's interesting. NASDAQ 100 today is underperforming the average stock. And that maybe is sort of what happens toward the latter part of a pullback and also when you're facing those earnings next week. Right. It should be. I think people hope all about the big company.
Is that enough to get us back to where the narrative once was? That these stocks are the ones to bank on, and having their success is good enough for the market to have overall success. I mean, going into the reports, Nvidia's down 9% this week. Apple's down about 3%. Amazon,
Google turning.
Down 15%. Yeah. I don't know if we ever were there where it was like, oh, all we got to worry about is 5 stocks and we'll be fine. But I do think that there's a question you might want to ask is, how negative do you want to be if yields are calming down? The S&P's at support. People have gotten a little bit nervous, and we have those earnings coming next week. So again, that's one of those. Depending on your current and recent position, it's going to determine whether you feel like you're leaning too far one way or the other.
That's what I was saying to you, Weiss, right? You want to be that negative going into potentially all of that.
Yeah, but what I see is that the downside risk is much greater from those 3 companies. Number 2, like Netflix, that blowout number.
All right, 10 years starting to turn up. That's not good. 10 years starting to turn.
What you'll see is that you'll undoubtedly see it because they're weighted.
Come on. Drop off 10 year.
But I just don't believe it'll be sustainable. I think it'll be a trade.
I mean, I do think there is an issue with, and we'll see next week will be a little more of a sample, but stocks have not traded well off earnings, just in aggregate. Even if they're beating, and that's been a pattern because investors just don't want to go out on that limb to say we can extrapolate the strength from here.
But let me say this, I'm big enough in Meta. Microsoft's a big position. It's just not big enough. So if that sells off because of earnings, I'm buying it because you have to buy them when they sell off. The fundamental story is the most powerful going forward in AI, without exception.
Meta?
Microsoft.
Oh, Microsoft.
Yeah.
All right. Well, we'll see. I'll see you.
Off the high, yeah.
I'll see you in a little bit. A couple hours. That's Mike Santoli. Coming up, we'll get you ready for the biggest week of earnings season beyond the mega cap names. We'll tell you the key names that are on the committee's radar. Of course, we'll trade them. We'll do it next.
Yeah, looking for pullbacks. Looking for pullbacks. Google trying to push through VWAP. Google. FANG stocks making higher highs and higher lows. I don't feel any kind of rush at the moment. Tesla just below VWAP. Looks pretty much like everything else. Apple reversing off the lows. All right, we got all the FANG stocks all of a sudden showing pops. Okay, we got pop. It looks like a buy program maybe. It's a little early, but that's what it looks like right now. All right, Google just shot up. Netflix is turning, making a higher low, higher high. Amazon trying to get above VWAP. Snowflake looks good. Tesla's breaking higher. Tesla. Okay, looking much better. Let's go. LATSGO. Let's clear this level. Okay, this is the third time we hit this level. Dollar dropping, VIX dropping. Crude oil off the highs. SPY showing some green on the 15-minute, green on the 15.
I think Visa's going to blow it out of the park. They are a company that has practically no debt. They're not exposed to the consumer. They have just an incredible balance sheet. It's a fintech company. It's a financial company, and it's a stock that I would expect to do very, very well next week.
Okay. Your take on that?
Yeah, I used to own Visa. I agree with everything you say about the company. The stock really has not been a great stock for whatever reason. So, I mean, it's a permanent compounder, but not exciting.
It's up 12% on the year.
Yeah, I say
Almost
permanent
13.
compounder, but Mark's up 20.
He's a hard guy to fix. I mean, what can I
There's
say?
there's a few tech stocks that are carrying the market up.
They'll throw Meta in your face. Verizon. That's what he likes, Meta-like gains. Okay.
So
Verizon.
if you're going to pick on me, you can pick on me for Verizon. I won't fight back. We've got to have exposure in the telecom space. It's like, what are you going to do? Now, AT&T surprised to the upside, so who knows? Maybe we get lucky with Verizon. I do think the dividend's safe. I think they're stopping and slowing down the capex on the 5G. They're laying some people off, so they're looking at the balance sheet. I think it's a stock I would not necessarily be buying in our weakness, but I wouldn't be a seller here.
All right, you want to take on Merck, and then we'll get Mr. Weiss's opinion since he likes profitable healthcare.
Yeah, I mean, the healthcare stocks have not been good either. I mean, it's just languishing. But there's a tremendous pipeline with Merck. Their balance sheet is fantastic. The profits are always there. They just beat and beat and beat and beat. No one's interested in the share price or the stock. So again, I'm not sure if I'd be a buyer on weakness, but I would not be a seller.
What about UPS?
Well, I love it. I think the market's getting UPS so long.
Ever since the last quarter, they've been selling off. They settled with the Teamster, they sold off. I don't know that the numbers will be great, but I would absolutely buy on any weakness with this company next week.
Yeah, UPS, look, I've been surprised by the strength in UPS and FedEx, but it's somewhat of a duopoly, although you have DHL as the biggest 3PL in the world. So it'll be very interesting. But with consumer not slowing down, with what we've seen in retail sales, there's no reason to think that they're going to slow. They've got more price discipline in terms of what they charge their customers and who they do business with. So I think it should be okay.
Jan, take us beyond the mega caps on the board. Which stocks, if any, jump out to you that you'll be watching more than some others?
Yeah, I mean, we've got a number of large industrials next week, Scott, and I think that's another key point. You know, is this relative reacceleration in manufacturing and the potential for infrastructure spend next year coming out of the Inflation Reduction Act? Does that create, you know, Kevin obviously made some trades in this space, you know, with Cat. Does that create some, you know, fundamental enthusiasm for the industrial sector, or is it just too late cycle to get excited about cyclicals? So looking at sort of some expectations for next year in the industrial space, I think an interesting point outside of mega cap tech next week.
What about you, Josh?
Look, I think this is going to be a tough market regardless, and I think what you want to focus on, the thing that worked all year, is quality. You take a look at every sector in the market, the stocks that are on top in terms of returns year to date have one major thing in common. They're the best companies in the group with the best balance sheets and the highest earnings quality. And I don't see why that's going to change in the next 10 weeks. So if you're out there on a day with the VIX at 19, 19.5, 20, and you want to add risk, add it the right way and focus on the companies that have the highest quality. I think that works in all 11 S&P sectors, quite frankly.
Let me just get you real quick, Josh, on a couple of mega cap notes that were out related to earnings. We couldn't get to it because we had so much.
All right, Netflix is green. It's been green for a little while, since about 11:30 or so.
That's you. You know, Amazon.
Google, nice rally. Google.
BC says the positioning sets up most favorably among the mega caps for Amazon. You want to take those?
Yeah, Alphabet of the FANGs is the closest to its all-time high, which was set back in November of 2021, about 148.68, give or take. The stock is
SPY, nice turn. Trying to get through VWAP and 4250.
It's almost 2 full years, but if you look at the earnings growth, it's actually better than Apple. It's better than some of the stocks that have made new highs subsequent to them. So I think this is
likely going to run into some resistance here. So there's a lot of puts at this level. So somebody needs to come in with deep pockets and push this back above 4250, 4260.
In a way that might be an upside surprise to the street. So I'm on both those names. I agree with both of those ideas, technically and fundamentally. I want to be an Alphabet and Amazon more so than the other FANGs going into next week.
All right, we will take a quick break. Bitcoin having a breakout week of sorts. We'll get the committee's take next.
All right, there's a possibility we're going to push through this level. If we get through VWAP, All right, Amazon, all the FANG stocks are cooperating. They're all pushing higher. Google. Breath is looking better. Come on, give me a higher high. Come on, let's go. Let's push this damn thing. Coal's at the high.
Welcome back. Bitcoin back on the rise. Best week twice since June. You own Bitcoin.
I do. And what's behind that is that decision that the DC Circuit Court of Appeals made, beating down the SEC in terms of with Grayscale. Grayscale's quest to launch an ETF. And today is the day that the Circuit Court of Appeals has until to modify the decision. Not going to. The SEC already came out and said they're going to appeal. So I don't believe in the use case for Bitcoin. I don't see any use case for it. In the 13 years, one has not emerged. But I do believe in supply demand driving a trade. So as you get these ETFs approved, as you get the massive marketing machines from BlackRock, from Melody, there's just not enough. So I'll buy a little more. I missed it. I tried to buy some today, but I missed it. I would buy more. I think Bitcoin keeps going high.
Okay. We will take a quick break. We'll come back with final trades next.
Just watching this level, see if we can get through it. If institutions want to push this, they could push it a bit higher, and all these puts are going to have to monetize. They could force the hand if that's what they want to do. For now, it's pretty big resistance, it looks like. Okay, we're pushing to this level. All right, nice bust to move here. All right, here we go. Here we go. Breaking above resistance.
High tick alert plus 800.
There we go. Nice pop there. Now, can we follow through?
Eastern closing bell. We wrap up the week, march it to the finish. With Dan Greenhouse, Cameron Dawson, Delphi Scott Black is back with us. Value investor extraordinaire. Give us some stock tips, I'm sure. Chris Harvey, too, has a new note out today from Wells. He's been talking about what stocks need to do, or what they can do between now and the end of the year relative to rates and earnings. So we'll catch up with him, too. Shannon, final trade, what do you have?
Consumer staples, and not just because people are feeling uneasy about the Middle East. There's opportunity for margin recapture in this sector next year as inflation.
Okay, let's run it. Okay, volume coming in. That looks good.
Uber, they're a lead reporter, not until November 7th, but it'll be here soon. I think it'll be a good report. Yeah, speaking of their reports, don't forget next week, we don't get Apple yet, we don't get NVIDIA yet, so, you know, we got to go in steps here before we get to the biggest one in the market and arguably the most important as it relates to AI to some. Kevin Simpson, what do you got?
We do get Microsoft. That'll be
Yes,
my
we do.
final trade. It's off 6% since the last earnings report. They crushed it top and bottom line. Double-digit growth for years. I like the stock.
I'm staying short the ITB. I just don't see any good news for construction, either commercial and residential.
All right, thank you. See you on closing bell, the exchange.
Okay, looks like a little. We took out some stops there, but not following through yet.
Thank you, Scott, and welcome to the exchange.
No, I don't think so, Kelly. I don't think so, Kelly.
Title of the move today, any optimism I think would be welcomed by analysts and investors.
We're moving higher at a snail's pace. We just had a nice little pop on volume. Most likely some shorts covering.
At this point, so maybe that's part of the reason we're seeing weakening demand, that upfront cost, even though over, I think, what is it, 15, 20 years, it pays for itself and more. I think that's going to be a headwind for a while. We'll have to wait and see on that. All right.
Come on, let's go, Spy.
Correspondent here on the network, breaking down the solar edge and the solar storage. Most of that sector pretty weak today. But now let's bring in Joe Mazzola, Director of Trader Education at Charles Schwab. Joe, I wanted to get your take here, not only on the move and volatility, we see the VIX back to levels we haven't seen since the end of March. And, you know, this is all based on, if you looked at yesterday's trade, between the choppiness, the roller coaster ride we had just in one session.
No follow through yet. Damn it, Janet. We need institutions to buy this dip and force these put holders to monetize. If they're interested, we're sitting at the 200-day. Is there enough? I don't know. I don't know that there's enough to make them want to buy, but we have a lot of blocks today. That said, we have a lot of blocks trading today. SPY 750,000 at 426.40. That was short covering a little while ago, 426.40. All right, back below VWAP. Okay, so this is what I was looking at. If you were thinking about short, if this continues, now you have a stop overhead. Just watching, see what they have planned for the evening session.
Holders of our debt, and they are not stepping in to support the bond market. So, you know, what I guess the question investors need to ask themselves is, what level of yield does the 10-year have?
Forward to next week when we get these major tech names. Several of
Come on, push off of this level.
and the most influential names, I guess you could say, in the tech and market space. So we'll start things off here with Microsoft. We're going in chronological order in which they report next week. Microsoft is expected to unveil its first quarter Tuesday, October 24th, after the closing bell. On a positive note here, recently they did complete that acquisition of Activision Blizzard following the extensive regulatory battle with these competitive authorities in the U.S. as well as Europe and the U.K. In less favorable news, it is disclosed last week that the Internal Revenue Service is proposing a
All right, reversing now.
settlement to Microsoft as part of a tax audit that covers periods from
Okay, look at the FANG stocks. They're at the highs. I wouldn't be surprised to see people take some profits off at this time of day. 1 o'clock, we got a little bit less than 3 hours to go. NVIDIA at the highs at 416.27. Meta's at the highs at 311. Amazon at the highs at 126.30. Apple at the highs, $2 off the low.
This is a nearly $2.5 trillion company, and it has had a absolutely massive rally year to date. It's been kind of front and center from the AI research standpoint. Its investment in OpenAI certainly has paid off tremendously this year alone. But you know, Jenny, when we start thinking about these four names, I know this is up vote, down vote. Those who have watched the show know that we're going to work towards just charting and trading two of them. Sometimes some of these stories get lost, right? We don't come back to them. I feel pretty confident saying no matter which four or which of the two that we're going to ultimately talk about, the other two will be covered the next couple of days on this.
Just looking at TRBCX, this is more of a long-term. I was hoping that we would close above the 10 EMA, but you know, we're still straddling this area. About 12 weeks into this consolidation, we had this nice run up, 45% from the low. If we lose this low here, I'll be forced to take a stop and close the position. The last two times we tested this area, we bounced. Momentum is more bearish at the moment, TRBCX. So no hurry to do anything, but I'm watching it nonetheless.
Their direct response ad. We'll also be wondering about any contributions from broad-based campaigns, which could be the indicator of advertiser sentiment and overall the advertiser feeling for the rest of this year. In terms of the cloud segment, much focus will be on profitability as well as how generative AI could have contributed to its top line. And also in question is how much CapEx is going to be needed to go forward to accommodate the various AI tools they have said they will build out over the next year. But YouTube, to me, has remained such a dominant player in the streaming world.
No follow through yet. S&P. We had a nice little bounce, but it looks like they just took out some stops. Now I need to see a higher low. If you're trading puts and this continues to accelerate lower, not a bad place to be. SPY. Monday puts.
These kind of streaming services, Disney Plus, Paramount Plus, Peacock, etc., seem to part of the conversation. But YouTube TV is just like streaming cable, and it's a name that people know and trust. The interface is nice, and they have this partnership with the NFL. We saw the NFL solve
All right, we're pulling back.
contract disputes in one game, one Monday Night Football game, brought Charter and Disney together to the negotiation table and got it done. This is a massive, massive story, and it's just a small, small piece of the overall alphabet story. So I'm excited to see what these numbers are. I want to see how much Sunday NFL Ticket really pushed the envelope.
So we're rejected at VWAP for now.
I thought that YouTube was social media at one point to me. At least that's the way I framed it. Now it's like a dominant streaming player, like you said. I mean, actually, YouTube TV is the reason I haven't re-downloaded Netflix. So I'm curious to see if that translates into any growth for their overall company.
Okay, so far the S&P finding some buyers, mostly shorts covering, mostly shorts and puts monetizing at this level. So a reversal and push back to the highs is needed, and then a follow through on Monday, which is possible if we can push this a bit higher, get pinned closer to 4,300. That would require a lot of buying and short covering in the day. Okay, let's look at the weekly time frame here. Okay, so from a weekly perspective, you know that if we're below the 10 EMA, on the weekly, this becomes more bearish. So we saw the drop below 5 weeks ago, and doesn't look that great here. We could reverse, hold this level. 4,200 is a level that looks like it might get tested today. Earlier, it looked more promising. Now we've had a bounce and rejected at VWAP, so there's still a lot of puts being traded. There are 68,900 contracts at the 423 SPY, 423 strike down below. Another 20 cents. Let's see what 420 looks like. 420, 55,000 contracts there. So there's a lot of activity from here, 425, all the way down to 420.
So long. At some point, this upcoming next couple quarters, these cost quarters are going to be the comparable. So you can't utilize that forever. This year of efficiency is coming to its end. So what's next for Meta?
The only good thing, or perhaps actually a concerning thing, depends how you phrase it, is Meta is the clear best.
Nice job. Thanks, Grover.
27% this year. The year of efficiency has paid off into the year of gains, but to Alex's point, we will start seeing the year of growth again for this company.
All right, so you can see with S&P weekly that unless this shapes up and quickly by starting off next week with a bounce and a move back above, say, 43.50, looks like we could end October with a more bearish look as as Art Cashin would talk about, end of month tends to be weak in October.
Another thing that's really interesting is the way this company has been investing very heavily in its infrastructure.
Can we get above VWAP?
We've actually seen warehouses and these different routes and ensuring their on-time delivery, which has then chipped away at some of their top-line growth. But it seems like in terms of then their consumers' happiness and in terms of getting their fulfillment out there while not having to pay a third party, that's a great story. So they have spent money, significant money.
A little rounding bottom.
Almost like they're a freight company at this point. It's amazing, but it's going to then, dampen some.
Little rounding bottom. Can we get going? Can we get this going? Get the party started. SPY, S&P.
From shipping to ordering to marketplace. I long for the day, Jenny, and maybe it'll never come.
Tick cumulative on the 15-minute did go green briefly. It's still green. 30-minute is green. So we need to shift that to the 60-minute. Okay. The 60-minute futures are on a green, on a buy signal. Been going back and forth between buy and sell on the futures. Can we rally? Come on, let's rally this thing. Okay, I'm going to take 2 minutes here. I'll be right back. I'm just going to stick something in the microwave.
With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
There's no place like the New York Stock Exchange. We got you covered. The biggest stocks, the biggest trends, all the market moves. The Watch List with me, Nicole Petalevy, 2 p.m. Eastern on Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time to look at our two upvoted names today, this being Microsoft as well as Alphabet, which are close competitors in the AI arms race. Microsoft with a slight edge over Alphabet, although in terms of its price performance, slightly underperforming on a year-to-date basis. So here's to tell us now about the technicals driving this name into their earnings next week. I'd like to welcome in Rick Ducat, our chart master. So Rick, walk us through what you're seeing as far as Microsoft. It's up 36% this year. I don't want to discount that, but it has pulled back around 11% from highs.
That's a pretty good summary of the way things have been going with this chart. Strong performance, but waning a little bit here as we transition from an upward movement. Like you can see, I have this blue trend line going upward here that's been broken, but our downward trend line has also been broken here. So we kind of are a little bit rudderless right now, and kind of not really having a clear direction, and that's exhibited by this range-bound price activity between about 313 to 339 or so, our green and red lines respectively here. So a bit of drift right now. It'll be interesting to see if we can get some earnings next week to shake things up a little bit, maybe give us some further directional bias here. But right now, we're also at an interesting point. You can see right here, we've got our two moving averages.
If the majority of traders were looking for a level to initiate some longs, I would imagine it would be near the 200-day moving average, just by everything you read in books. That said, it is an OPEX. So we got to wait for the evidence. We got to wait for the evidence, the cavalry to show up. Here we go. We're starting to push a bit higher now.
High took alert plus 800.
What?
Not really a clear lead once again, one way or the other. So, you know, you can
What's up?
overall,
What's up?
long-term moving average.
What's up? Can you leave my microphone alone, please?
I know, I've always said that Microsoft is one of the more stable of the Magnificent Seven, Elite Eight, whatever you want to call it, even with its exposure into like Xbox and its Activision.
All right, so this is a second shot at BWAP to push above. The good thing is it's in the evening session, so if institutions want to push the issue, we could see some short covering. Got a lot more blocks coming through, by the way.
Momentum is breaking out to the upside. I think probably what a lot of traders would be interested in if we start to break above this trend line on momentum. At the same time, we start to break out of the range. That's something I would really have my eye on. Conversely, I would be looking for a drop below that 50 midline, the same time we drop below our old trend line here, our upward sloping trend line here. Those would be the two main scenarios I would probably be on the lookout for. One would be much more bullish, obviously. One would be more bearish signals. The drop below the 50 midline is regarded as a bearish move here, so that would be probably the thing that's closest happening. We're only a little bit above that 50 midline. We wouldn't need too much further decline in price, which would also take us below our moving average compliments there. So really, I think more to worry about to the downside if things kind of keep faltering a little here.
And especially with the overall sentiment today, adding another percentage down.
All right, we got a nice little rally. Here we go.
Alert plus 800.
High tick.
Now support and resistance. What are you watching into earnings next Tuesday?
Volume profile is a study that I think can really help shed light on key price areas to watch here. You can see that this blue bar graph on the right side of the screen shows the areas that of particularly heavy trading, the point where we had these price levels. You can see we had one centered right around maybe 333 or so. It's just a bigger one, so that's kind of just the midpoint of it. Another one right here around 313 or 310, excuse me, not 313, 310. So those would be two key areas to watch based on this study. And when we factor in the range that we were looking at here, probably around 313 to 339 or so would be the points that we'd really be sitting up and noticing if we started to break out. Beyond that, we've got our volume nodes, so about 310 to the upside, maybe 342 or so, our old upward trend line. That could be another area to watch. But for right now, we're still in the volume node. We're still above our moving averages. We'll have to see if earnings shake things up, like I said.
I'm sure some earnings will shake things up next week. I can't say specifically Microsoft, but I would be shocked if we didn't see some massive volatility starting Tuesday when we start getting some of these big names. But now in trading this name, Alex, I do think there's a lot of focus on some of these mega tech names ahead of earnings. Walk us through what you're thinking here for a trade.
Here's a little nugget as well when it comes to Microsoft. Microsoft is another name. You talked about Zuckerberg's ability to navigate conference calls. Microsoft has been notorious over the last couple of years of letting the results out, waiting an hour or so, having that conference call, and really changing the interpretation of results that at times have been disappointing until the company's management explained where things were going and then pop back. So looking for a little bit more of a quiet earnings event. When many traders default and think about trading around earnings, oftentimes, Jenny, they'll look to premium selling strategies. So we've done that here.
High tick alert plus 800.
So range bound, we're looking at a range bound neutral strategy, selling an iron condor, the 307.5, 302.5 put vertical alongside the 342.5, 347.5 call vertical. If we're able to get $1.70 on this, be 170 in max profit, 330 as the max loss. That's a close to 2-to-1 risk reward ratio. You can see those break evens at 305.80 and 344.20. These are critical because our next chart, I got a bonus chart for you guys here today on this Friday. Maybe Rick will get a kick out of this, but looking back over the last time frame, what you'll see is these two white lines represent our break even. Well, going back several weeks here, this captures all of the trading. So basically the entire last quarter is within our break-even points. That's the idea here going into this, Jenny. We're going to need this to break outside of that range.
So like we said, this has been pretty sideways. We need the exact opposite of this down. We need anything but sideways into earnings. And this name has been another one of the traditional earnings called relatively dull. And I will say so is Alphabet, because Alphabet hasn't always had the most exciting earnings calls, but they have done a great job restating that in the last couple of years. And again, I think I'm just, some bias is included in this because I'm excited to hear about YouTube. But Rick, sorry, Texas won't go. What are you watching here now?
Another tech giant, another extremely strong chart, even stronger than our last one. We're up about 64% off those yearly lows. I'm not seeing the same slowdown, really. Our last chart, we had a broken uptrend that was just kind of drifting sideways here. But we can see, although we did recently break below this upward sloping trend line, we actually kind of still were trending upward here. We were still making a series of higher lows and higher highs. So even though the trend line was breached, we managed to move into new yearly highs shortly after here. So just kind of an interesting situation. Important to sometimes keep these old lines on your chart. They can still come back into play, even when you don't really expect it. But we can see once again, we are at a crucial point. We are on the precipice of breaking below our yellow 21-day EMA, coming in right around 136.52. We're a little bit above it at this point here. But once again, that would be a key area to watch as we head into the close here. A close below that level would be worth noting. That would be a bearish sign. A close below that level also probably would start pushing the slope of our moving average itself from upward to downward, or maybe sideways, but most likely downward here because of a bad close. So that would be
All right, we got to push this a little more.
potential trend. And this is the canary in the coal mine, so to speak, the 21-day. That's our shortest term moving average. It's the one that reacts the fastest to changes in price. It's also the most susceptible to fake out. So you kind of have to make a decision as a trader. Do I go with this, or do I wait for further confirmation, perhaps from one of our longer term moving averages or one of our other technical sources of information?
So I love this, and I love the idea of a potential trend reversal or change, at least, because right now it feels like
All right, we're looking for a higher low and a higher high.
a lot of these earnings to be that catalyst, I think. It may be to the upside even, because I am a little bit tired of the selling, but walk us through now momentum of the trend here, of course, into this earnings event.
Once again, kind of a similar picture here. Long-term deterioration of upside momentum, trend line going across the highs. But the big difference here, the really important difference, is that as we've seen this decline in momentum, prices continued to rise here. So you would have been in a tough situation if you were trying to make a play based off of this kind of bearish divergence in between price and momentum. Price kept making new highs. RSI was not making new highs at the same time here. We're also pretty close to the 50 midline here. That would be another bearish signal. You can see that we are kind of drifting down toward that point here. The crossover would be the thing to note if RSI were to close below 50. So now we can see as well, the trend line, I think, is more important than the divergence in this case. Because as I said, divergence can go on for a long time, and you would be getting crushed if you were trying to go short this from the beginning of this move upward. It's why it's important to have a stop loss, especially when you're doing this type of trading here. Get a point where things are really going against you, that you have a plan, an exit strategy, so to speak.
I completely agree, and I think it's sort of been impressive the way that it's up 4.5% this month, even in spite of some of the recent selling. And it just goes to show the resiliency we've seen come out of it all year long. But now, some key price levels you're keeping on your radar, obviously, into earnings.
Volume profile once again sheds light on important trading areas here. You can see right around 136, we have a pretty
Semiconductors trying to get that to follow through and bounce.
Or, excuse me, 131, another obvious spike here. So these are areas where you might expect to see some consolidation. You might expect to see price kind of, moving sideways or finding support or resistance in these areas here, these areas of high conviction. So we can see once again, price in the thick of one of these nodes that we're highlighting here with our shaded area here. If we were to keep moving to the upside, 136 I think would be the first hurdle, based on the point that we reached some highs and some closing highs several times around that area. The old highs near 141.22. That's the real mark to beat, though. To the downside, around 133 or so, because we have our 63-day EMA. We also had points where we closed around that area numerous times as well. Sometimes these things aren't clean, cut and dry on the money. It's a general area. The 133 area around that point stood out to me.
And I would say rarely are they actually, unfortunately, clean, cut, or dry. But I've been looking at this name, it's been consistently moving to the upside. So a really great breakdown on both of these tech names into earnings next week with our chart masters. Now, when trading this name, Alex, walk us through what you're thinking. We also have pretty much the same duration ahead of this earnings event. Alphabet has fared a little bit better than Microsoft this year, but has also been met with some of the same pressures of, say, disappointment in the AI, but all things considered, we've still seen a nice year.
Yeah, I would say inertia is still in the favor of a name like Alphabet. When you look at just how strong this trend has been, it's weathered the recent market volatility much better than other names. It's only like $4 or $5 on recent highs, just over 141. So looking at a more bullish strategy here, it's risk defined. It expires next week. So this truly is a little bit more binary, directional type of a trade into this earnings announcement. Looking at buying a one in, one out call vertical. So buying one call that is in the money, selling one that is out of the money, creating a $5 wide spread from 134 to 139 for a 250 debit. Now, granted, the stock was a little bit lower priced in terms of today's action earlier. So I don't know if this price would still be there, but at the time it was around 250. At 250, it created a 1-to-1 risk reward ratio, 250 and 250 with a break even of 136.50. What is our other guideline for these, Jenny, is to have that break even close to the current share price. Well, as we speak, 136.65 is the trade price, pretty darn close to 136.50.
Yeah, even this week, it's been impressive the way the team's been able to hold on. So obviously, let's look forward to next week as far as earnings, but that'll do it for this segment. Now, coming up next, we will recap another name that already had its earnings this week and is seeing some favorable price activity this week today, slightly lower today, but that's Taiwan Semiconductor, as the street so really likes this name and has strong beliefs now into the back half of this year. We'll discuss more coming up next.
All right, I'm going to look at a few names here. I'm just watching some data points. LNTH, Bounce.
My dad instilled in me, always put people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me.
CBay. DLO.
Tune in 24 hours a day, 7 days.
DGX.
Network.com.
Quest Diagnostics looks pretty good.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device, and available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Ollie. OLLI. Ollie's.
Welcome back to Next Gen Investing. It's time for our look at the developing story with Ben Lichtenstein, the host of Futures. So Ben, walk us through your seeing in these markets. I was looking at the four major indices earlier on the session. We were pretty much at session lows, so we recovered slightly.
Yeah, slightly off lows here, Jenny, but a difficult week for stocks, and basically 200 points to the downside in the S&Ps. This looks to me like a market that's trying to navigate, trying to push forward amidst multiple headwinds that are becoming increasingly difficult to shrug off. There you can see all four of the major indices in negative territory here today, led by the NASDAQ, which is down around 0.75%, breaking down below 15,000 this week. I've got the S&P chart queued up here. You can see the move lower from 44.23 down to 42.55, and a significant move to the downside here, but in many ways still relatively contained. And you can see the trend that we're looking at here. This goes from the highs we saw back on Tuesday. Again, almost 200 points to the downside, so a big move. But this comes with rates on the rise, right? Speaking of headwinds and how it's become increasingly difficult to shrug off. You've got the 30 on the left to 5.14 and the 10-year on the right to just shy of 5%. But I did mention relatively contained. Look, we still have yet to take out that low from earlier this month down around 42.35. And I just want to show you where we are relative to the 50 and the 200-day moving average, because we actually just retested that 200-day moving average again this week. As you mentioned, off the lows here, but still negative on the day, Jen.
So Ben, what else are you keeping on your radar? We obviously have catalysts for next week, but there's also this sentiment shift, I feel like, with some of these geopolitical concerns now occurring in the market. So what are you watching overall?
Well, that's exactly it. I mean, the market, for the most part, is still contained. We're kind of in this range we've been in since June. We talked about that earlier in the week. But with the geopolitical tensions, I think there's a couple things to keep an eye on. Crude, first and foremost, speaking of contained, it's in the middle of the range that it's been in for a while now, 95 to 81. So right around this area, it's not really derailing anything or creating any real negative energy into the market here. But if geopolitical tensions were to increase, then I would expect to see crude prices continue further above 95. Ultimately, that adds to some of the headwinds. And then also, Jenny, keep an eye on gold. It's one of those safe haven, traditional safe haven type products. So if crude were to get down 95 amidst geopolitical tensions, Middle East tensions increasing, or if the indices were to continue to sell off, ultimately, that's where you might see investors start to flock to, migrate to. Again, gold futures this week up above 2,000. A pretty strong move to the upside there, with stocks moving lower and rates on the upside. Definitely something to watch if the geopolitical tensions increase or if things get worse.
Yeah, Ben, great point, because right now across the board we're seeing red minus crude oil as well as gold futures. So they do seem to be a bright spot, at least to close out this week of selling. But we will leave there. Really great breakdown on what to keep on our radar heading into next week. Ben Lichtenstein, the host of Futures. Now I'd like to bring back in Alex, and it's time for FOMO. And first and foremost, before we get into Taiwan Semiconductor, curious your thoughts really on the macro picture into next week.
Yeah, I think next week's going to be a major turning point for the market one way or another. Things are going to be, the score is going to be settled in many ways for the trajectory for the rest of this year based off of some of these big tech earnings that we just talked about in the last couple of segments. I mean, it's just so much of a mathematical weight for the S&P 500 more than NASDAQ 100. I mean, Tuesday alone, Microsoft and Alphabet, you add those two companies together, you're almost at the entire Russell 2000 in terms of market cap. So at some point, math wins out. If those things start stacking up in the same direction, it can be a lot for the market to withstand.
Yeah, there are a ton more earnings even outside of these big tech names. We were talking about Coca-Cola, GE, and Boeing on Morning Trade Live earlier, and I was joking, these are the Dow stocks. These don't matter as much, but of course they do. There's so many names reporting next week. But now to relook at this week and the week that was, as far as several big earnings moves, Taiwan Semiconductor actually has been able to hold on to its week-to-date gain. It's up 1.5%. Not necessarily a huge move to the upside, but still an earnings event that seemed all in all positive for not only just the company itself, but for maybe the rest of the semiconductor industry, which did face its own specific headwinds this week. But today, Goldman Sachs adding Taiwan Semiconductor to its conviction buy list, saying following their quarterly update, also they did see that the end of inventory correction could be showing some signs of demand stabilization in PC and smartphone markets. I've been hearing this narrative, though, Alex, what feels like the better part of the last year. I will believe it when I see it, that we finally hit this bottom in terms of PC and smartphones, because it doesn't seem like that has come to fruition yet. Now, their earnings, I will say, did lift some of the overall gloom surrounding the chip sector. We did see that they gave a pretty upbeat outlook in 2024. Could be good for Intel as well as some of the other semiconductor space. They did say that demand for their latest chip technology was helping offset a glut of semiconductors caused by the falling demand of these consumer electronics. Even though the revenue did fall about 11% from a year ago, it was up 14% this quarter. So that is a sign of improvement.
All right, looking for a higher high now. Looking for a higher high. Futures are cruising along. Green signals.
But all in all, it did seem like this was at least somewhat of an optimistic tone heading into right now Intel's earnings, which will also release next Thursday after the closing bell. Another name to keep on our radar here.
Yeah, as you mentioned, about 70% coming from U.S. customers, 10% China, 10% Taiwan, and the rest is made up by the rest of the world. This is the largest dedicated contract semiconductor manufacturer in the world, with roughly 30% market share. 85% of its sales is wafer manufacturing. 40% comes from smartphone. 40% from high performance computing. 10% Internet of Things, and then some of the other stuff will make up 5%. But we forget about just how massive this is. You're 30% of the world's market share in anything. You're a major player. This is a semiconductor player with 30% market share. It is so overshadowed, and simply just because it doesn't grow at the same rate. When it comes to the weight in this space, few names, if any, rival the importance of this particular company.
I know, but it always, every time we talk about this, Dave, I'm flabbergasted by that, because they make the processors for iPhones. They also make some of these mobile chipsets for Qualcomm. They also have some exposure to NVIDIA's various chips. I mean, they have a $40 billion investment in this manufacturing site in Arizona, which is expected to supply chips to Apple in 2025. So they have so many of the most powerful customers in the world. It's quite amazing to me that it is like under-discussed.
Of those 10 largest customers, 80% of the net revenue for Taiwan Semiconductor. So much like some of these other names we talk about, the exposure to the Apples of the world, so important for a name like Taiwan Semiconductor to maintain those relationships.
And I know they've had some hiccups with their factory that has been seen as the best way to pave the way for that relationship with Apple. I know it's already existing, but that's seen as an extension of their relationship. But they
Need a higher high.
now on target for that to continue production in the new year. They gave a really positive outlook on that specific factory. So that was, I think,
the one in Arizona.
Right, the one in Arizona. So that was also another huge bright spot. I'd say the thing is up 28% this year, roughly. It has pulled back about 17% from its highs, but still has been a relatively strong name this year. Not as strong as you'd think with some of the big customers, but Alex, with that in mind, I mean, what are you thinking for an example trade? We do already have this earnings done behind us.
Yeah, I was just thinking about it, and it's a one beta name, so it's not typically as volatile as some of these others that we talk about. If you look at implied volatility right now, it's sort of in the mid-30s. Seems a little bit different. By comparison, a name like AMD is upwards of the mid-50s historically, so it doesn't move quite as much, and some of that has to do with its more mature role within the space. It's not seen as this hyper-growth company the same way NVIDIA, AMD, etc. are. That being said, from a trading standpoint, there's certainly optimism. It hasn't necessarily screamed to the upside the same way some of these other names are. Say you believe that there's still upside to be had in a name like NVIDIA. I looked at a strategy that would benefit from a continued move higher. Now, I went to a weekly option cycle, Jenny, because it allowed us to get single dollar-wide strike availability, but we still go out a fair amount of time. So we're going to December 1st for this expiration. And what we're looking at is a skewed call butterfly, in which we're buying a $7 wide debit spread and then selling a $3 wide credit spread. All of this centering around the short strike at 97. So in particular, December 1st, 90 call, buying one of those, selling two of the 97, buying one of the 100 to define the risk. We're able to do this for a 250 debit. That would mean $250 in total risk on this. If this stock was below 90 on that December 1st expiration, 92.50 is the break even. And of course, its best case scenario is a rally right to 97. Now, granted, you can't overshoot that, but there's no upside risk. You would just theoretically give back some of that max profit potential. This is because of how it's structured here. $7 minus 2.5 still leaves $4.50. That's your max profit. And then you just could give back 300 of that. So you see where it flatlines past that 100 mark, it would flatline at a $150 max profit in that outcome. So no upside risk. Best case scenario move to 97, but risk defined in the event that the upside just isn't there.
Right, and of course, making a modest move lower today, down about 1.2%, but that'll do it for FOMO. And now coming up next, we will look at a name that is not making a modest move to the downside, and that is Solar Edge, as it's one of the worst performers on the session. It is down almost 30%, pacing for its worst day since going public nearly 8 years ago. We'll discuss more why.
Okay, Birkenstock looking pretty bullish today. Volume tapering off. ARM Holdings, I'm definitely looking at some potential on, ARM Holdings, new low. ARM Holdings, a new IPO low. Glad we waited.
Every morning, our analysis is your blueprint for the day. Bonds, stocks across all asset classes. On Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. Eastern.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network. Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services.
Schwab Network, available anytime, anywhere, on any device for free. Then watch the market with the Schwab Network.
Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Investing. On this topic, joined by Jenny Horn. Jenny, time to talk some Solar Edge. Stock is absolutely collapsing here intraday, down 25%. We were talking about Netflix having some big moves like this in the past and how you just remember these days. Solar Edge investors are going to remember a day like this for forever.
No kidding. And actually, this is them erasing some of those earlier losses. You're actually seeing some steeper selling. When I was first looking at this name pre-market this morning, but here to tell us more on the move to the downside, I'd like to welcome in Jeff Pierce, Senior Manager of Derivatives Trading for Charles Schwab. So, Jeff, walk us through this move. I know that they gave some downbeat guidance, but there's also now analysts just piling in with the price cuts today.
Yeah, unfortunately, the hits keep coming today, as you pointed out, on path to one of the largest sell-offs we've seen since the IPO. They're breaking a previous record of almost 23% to the downside in November of 2020. Yes, this is coming from those preliminary results where they said Q3 revenue, gross margin, and operating income would be below their prior guidance. The company also said they see significantly lower revenues in Q4 of 2023 as they see this destocking process continue and slowdowns on installations in Europe continue as well. In terms of the numbers, Q3 revenue now expected to be between 720 and 730 million. Previously, it was looking to be between 880 and 920 million. Adjusted gross margin now expected within a range of 20.1 to 21.1%. Prior expectations were 28 to 31%. And adjusted operating income now in the range of 12 to 31 million. Previous expectations were 115 to 135 million. So some really big adjustments there. We've got analysts weighing in. Certainly, tons of analysts have downgraded the stock. They moved the price target. We'll touch on a few of them. Deutsche Bank lowered them to hold from buy with a price target of 150, now down to 300. Roth MKM downgraded them neutral as well from buy. Price target at 100, down from 280. Goldman Sachs to neutral from buy, and the price target at 135, down from 254. So it seems like analysts were as shocked as investors today and are really having to make some adjustments to their prices.
Jeff, I was wondering how you kind of assess these things. When I look at a name that does this in terms of, I almost consider this an early release of the earnings. I know that their stated date for release is November 1st, but I always kind of say this takes a lot of the sting out of that November 1st release.
All right, so there's still sellers.
Numbers on that, so you see this rapid repricing. How do you see these next few weeks going as we lead into that result officially released on November 1st? Is this kind of the move, and then that'll just confirm it?
Certainly, we've seen that in the past, and I think investors are hoping that this is the last or the worst of the sting they're going to see, that this really has paved the way for what the results will be. I don't know that the other names that are down in sympathy are as excited about this release. You know, certainly this could have a big effect on the entire industry, and especially when we look at the residential side of it. If you look at some of their competitors, you think Enphase, which is one of their most direct competitors, already down 60% over the last 12 months. You look today, they're down about almost 15%. This has been certainly had a lot of pressure, with the exception of really First Solar, which is almost flat right now. Most of the other names are down significantly.
Yeah, and that's been the case this year. I think we've seen such divergence in the performance of these alternative energy stocks, showing that they don't always trade in tandem, but unfortunately, today they are trading somewhat in tandem with Solar at this specific downbeat guidance. But then we'll leave it there. Really great breakdown. Jeff Pierce, Senior Manager of Derivatives Trading for Charles Schwab. Coming up next, we are not going too far from this conversation. We're looking at another name that is somewhat collateral damage to Solar Edge's move to the downside today. That is Sunrun. With some specific analysts, maybe some downbeat guidance now. Discuss that name more. That's lower on the session coming up next.
One on the south side of the country. Now, working a lot to help people understand the world of the air. This week, That means about the box and usually answer everything.
Swap Network app and join in on the latest market trends. Anytime, anywhere, on any device with free. Swap Network.
Trading the trending names every day. It's fast money. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Money. Weekdays at noon on the Swap.
Cut the cord on the way you get market news. It's Market on Sales. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, or anytime, anywhere, any device, for free. Only on the Schwab Network.
No politics, no rules. Bell to bell and beyond. Available anytime, anywhere, any device for free. Swap Network. Miss out on today's market headlines? Get caught up and catch the rest. SwapNetwork.com. Available anytime, anywhere, any device for free.
Sun run here on its own little bit of a downturn today, down about 5.5%, even below $10 a share. This company is in dire need of a sun run of sorts, Jenny, because since peaking out just under 100 a share back in January of 2021, it has been in a steady, I'm not even going to say slow, a steady decline to $10 a share where it basically resides right now.
Yeah, I mean, this name isn't seeing its own community today, and it's down 70% from its high, and also seeing some significant selling. And what I thought was interesting about the entire sentiment around the solar space is like this Deutsche Bank analyst today cut his price target to $15 from $27. I mean, $27 a share, nowhere close to where we were trading. So here to break down more of this analyst news, of course, that it's right on the overall sector. I like to welcome George Tillis, senior markets correspondent for the network. So Alex, Julia Rouse and I on the break were discussing the difference between all these companies. They're not all the same. There's some divergence with like First Solar, for example. So what separates Sunrun apart from, say, like a First Solar? Why is it seeing such an effect as a result of Solar Edge?
On that bigger picture with these companies right now, I mean, first off, Deutsche Bank has downgraded the stock to a hold, and they moved their target from $22 to $15 for Sunrun, and I think there is a profitability challenge specific to this particular company that's creating some pressures. The other thing is you have to look at the constructs of their business, which is essentially residential solar. Now they do supply all-inclusive technologies, including things like charge controllers, monitoring systems and software, of course, inclusive of solar panels. But look at SolarEdge. That's another company that's focused primarily on the residential solar market. It's down significantly today on the back of announcements of cancellations. And you have to think about residential abundance. Consumers are strapped right now, so effectively they're going to look for ways to cancel their spending. And solar is essentially very expensive, and the financing now has become expensive.
What's wrong?
And I can see why these stocks are down. Now they all got a boost going back to July of last year because of all of the tax credits and subsidies associated with the Inflation Reduction Act. One of the things I noticed going into looking at a lot of these companies over the past, let's say quarter or two, is there's been quite a divergence away from residential solar companies versus those that actually have more deployments and exposure in the commercial and the industrial space. You look at, for instance, First Solar, its actual performance in the last year has been pretty good compared respectively to all these solar companies because their focus is the industrial space and commercial space alongside utilities. Because if you think about cash flows, cash flows in the household level are strapped, but not utilities. They have generous cash flows that they generate from customers, and of course are paid
and given subsidies to invest in solar technologies as well as solar farms. Now, these are other industrial spaces like array technologies. They make instruments and software that pivots the solar arrays to optimize the solar yield. That company's down on the year over the last year, but it's not performing all that bad compared to some of these residential names. So the moral of the story here is there's clearly a preference right now from the standpoint of commercial, industrial solar companies versus those that are unfortunately focused on the residential side. And last, I'll say this: Tesla is a very aggressive competitor in the auto space. They've been cutting prices. Used to say they won't cut prices for solar because I see a lot of Tesla trucks installing solar panels in people's homes.
So, George, as we kind of look ahead then, I think it's clear your dynamic you laid out based off sort of where the incentive structure is right now, given the macro climate as well in terms of discretionary.
All right, we continue to drift lower now.
It doesn't seem that the market's favoring residential. Within that space, though, we were talking Solar Edge in the last segment with Jeff Pierce. He kind of went through the release and the disappointment there that seems to be, sending shockwaves through this sector today. Is it fair to see this type of movement in Sunrun on the heels of that? Or is it possible that a name like Sun Run, in this case, is actually an outperformer within the space?
Well, I mean, I have to look at it just from the secular standpoint of looking at residential versus the commercial side. I think, I'm not saying for sure, but if you look closely at the Inflation Reduction Act, there may be some credits that are expiring for residential consumers. But there also might be, this is something, if you're interested in the industry space where everybody is, to be invested in, look at the 24 budget. I'm sure there's probably a lot of incentives, tax credits and subsidies embedded in the next year's budget, but it might be more concentrated in the industrial commercial space. So that's my take on this. I think right now, you got to stay away from companies that are not profitable, and anything has to do with the household spending that are long-lived assets. They're expensive. They last more than a year. This includes autos too. I think that's an area that's going to struggle for quite some time because of rates and of course inflation, which has compromised affordability.
Yeah, and I think that's the exact fear right now that's sort of rippling through these market stores is that we can see this exact thing sort of persists now. And what does it mean for some of these companies that just don't have the strength of their balance sheets, like the mega cap names? And these solar stocks obviously getting punished today, it just fuels the fire of the selling we've seen this year. It's only adding to this weakness. But really great breakdown all in all on all these solar stocks, specifically Sunrun today. George Tillis, senior markets correspondent here for the network. And it also does it for Alex and myself for Next Gen Investing for this entire week. Have a wonderful weekend all. We have the watch list hosted by Caroline Woods coming up next.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
I'm Nicole Petalini, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
If I had to guess, it looks like we're going to just chop around VWAP into the close. Pin somewhere around here between 42.50 and 42.60.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week. SchwabNetwork.com. All your devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network. Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Good afternoon and welcome to the Watch List. I'm Caroline Woods in for Nicole Petalides. It's 2 p.m. here in New York. I'm live from the floor of the New York Stock Exchange. We have 2 hours left to go in today's trading session. Here's what's coming up on today's show. Take a closer look at the conditions that has one of our guests liking commodities like oil, copper, and gold. We're also welcoming the chairman of Ego as EV Maker goes public with what one backer calls an iPhone on wheels. And our panel looks at the record revenue for American Express and what it may say about the broader economy. But as I said, we only have about 2 hours left in the trading day, final trading day of the week. Let's get a quick check at the market. Red arrows holding firm. You can see here it's Dow down about 113 points, so off earlier lows, but still down regardless. That's about 0.3%. Russell's down a little bit more than that. The biggest loser is the NASDAQ today. It's off about 0.75%. 108 points, and the S&P 500 off 0.6%. All of the major indices on pace for weekly losses. The NASDAQ, the biggest loser there as well. Let's take a look at some of the futures products now. We are looking at basically flat dollar, not a whole lot of movement there, but gold is higher, trading around 1994. Meanwhile, crude actually has dipped lower. It was higher, but basically flat right now. And Bitcoin, it's up about 2.5%, trading around 29,625. For some of the biggest stories in the markets, let's welcome in Tom White, senior options contributor and co-host of Fast Market, of course. Tom, thanks for kicking off the show with us. You're taking a look at solar stocks, and I was talking about these earlier this morning, and it looks like they're pretty much holding on to those losses.
All right, so if we have a shot, we got plenty of time. I got 2 hours to go. If we can manage to push above this pivot high in 42.60, we might have a shot to higher. What'll happen is puts will monetize, of course, and then we can push higher. But very difficult, very much stuck like glue to VWAP at the moment.
Their strong period. So that in combination with the higher interest rates here in the U.S., less demand here in the U.S., kind of hurting the stock at this point. You're seeing most of the other solar stocks in this space, Sunrun, SunPower, Nova, NOVA is another one that's taken a hit on this. They said installation rates for the third quarter were much slower at the end of the summer and in September, according to the CEO, where traditionally there's a rise in installation rates. He said there was no impact. This is an Israel-based company. They said that adjusted guidance is unrelated to the Israel-Hamas war. Manufacturing remains uninterrupted at this point. But I think the struggling part for this company in this sector, which was, just about 6-8 months ago, everybody on the street loved this stock, but you saw multiple downgrades in SolarEdge across the board today from Oppenheimer, B of A, Roth MKM Partners, and Deutsche Bank, and they were basically surprised. They expected a little bit of weakness, Caroline, but I think the key point that they said was the margin compression. So that's going to probably relate back to inventory issues as demand wanes a little bit for solar installations. But yeah, not a lot of pretty sights here for the solar industry to wrap up the week.
Yeah, certainly a bad day for solar stocks. Now, to the upside, we do have GM actually moving higher, bucking the overall weakness. I'm actually taking a look at shares. They're up about 1.4% right now on news that GM submitted a new proposal to the UAW. What do we know about this new proposal?
Well, the proposal is pretty robust, historically for this company. Ford came out at the end of last week and said, hey, we're done going higher. We can't go any higher. It's going to hurt the overall company. GM came out with their best proposal now, which includes 23% general wage increase. UAW represented employees at GM will make $3.39 per hour on average. That's $84,000 per year based in base wages. By the end of the agreement, all GM UAW represented team members will receive that immediate wage increase. That 23% increase over the $32.32 per hour that most factory workers make currently is compounded annually at about 25%. They also reinstated cost of living raises for many of the employees that were given up in 2007. That'll boost the pay increase to over 30% by the end of September of 2027. New car registrations in Europe, those increased by over.
All right, General Motors is updating their offer to United Auto Workers. All right, we're back down to the 105, looking for a bounce.
Negotiations with the big three. Now, a lot of people don't see any end in sight to the strike, Caroline, but at the same time, I think the automakers are getting close to being done giving in a little bit. And I think one of the caveats that they're not going to give up is that 4-day work week or that 32-hour work week that the UAW is pressing for. But we might start seeing some resolutions come to fruition here, maybe over the weekend as they increase talks, but we'll get some more clarity from the UAW president at the end of the day.
All right, we'll certainly look forward to that because Sean Payne always has interesting choice words to say. GM and Ford both higher right now. Stellantis, though, a loser on the day and the loser on the week. Tom White, thanks so much.
Thanks.
Now let's take a look at the bigger picture with Shams Afzal, Managing Director and Portfolio Manager, Carnegie Investment Counsel. Thanks so much for joining us today. So let's go back to the broader markets. We're seeing weakness today. We've really been seeing weakness on the week. The Nasdaq off more than 2% on the week, about 2.2%. S&P off about 2%. Russell down a little bit less than that. What's your take on the weakness that we've been seeing? What do you attribute it to?
I have to say the statements from Powell yesterday, most observers were probably looking at much more of a balance, much to what, Fed member Bostic or Harker even delivered over the last few days. But I think what they found was, on one side, it was much clearer that the chances of a rate hike in November is probably not in the cards. But the wide door opened up, for a December one or perhaps even one later, was just not something that Wall Street was looking for. So on balance, I think it was disappointed in that the Powell did not match the sort of the cadence that was received from member Bostic and Waller and some of the other Fed members.
So we saw equity markets turn lower, and then we of course saw that spike in 10-year Treasury yield surpass
think, 5% is not an extreme level. The fact that it's gone to these levels so abruptly is probably what's causing some people to do double takes here. But if you go back to 2005, 2006, we had 5% yields back then, and we still managed to have decent GDP growth. So I don't think it's a deal breaker by any means. But overall, we think that 2.5% real yields is just not warranted going forward, right? It just all depends on when the rate cuts begin next year. But I just don't think 2.5% is what is actually needed. What the needed rate ends up being is anybody's guess at this point. But I just don't think it's at these levels, right? So we can touch 5% maybe overshoot.
All right. What I'm anticipating is price action hugging VWAP. It's flattened out. Tests lower, tests higher, but not going anywhere. Just sideways between 42.50, 42.60. Maybe we get down to 42.30. Unless they want to sell this really hard.
The names that come to mind, obviously, Abbott Labs is one of the names that have reported this just this week alone. And I think there's some strong fundamentals happening where the market has sort of set aside all the device manufacturers in a way as if they're all going to succumb to the pressure of the
Low tick alert -800.
If you listen to both Intuitive Surgical CEO and Abbott Labs from a couple of days ago, they say that they're seeing an uptake in the number of people, the patients that are on GLP-1 drugs that are also happening to use Abbott Labs' premium device, the Freestyle Libre. So it's not a lose-lose situation. I think we may find that a higher number of populations within the type 2 range is choosing to add a monitoring device to their overall regimen with Ozempic, right? So that's one of the areas where you're looking at the demographics in a way without looking at direct consumer spend.
You also like U.S. Bank, though, and that's under pressure today. Regionals in general are under pressure today. Why that one?
Well, I put that in the speculative column, right? I mean, I would say that if you want to get your 7 hours of sleep at night, go for JP Morgan, right? But U.S. Bank may open up maybe a slightly higher risk reward over the next 2 years, mainly because October 16th, the Feds gave a final approval for U.S. Bank to basically stick to their Category 3 level of Basel III Tier 1 capital ratios. And prior to that, I think most of Wall Street was expecting that the bank will have to scramble and to raise the overall cash cushion by at least 2 percentage points over the next 2 years. And now they have a 3-year runway for them to build this up. So based on the synergies from Union Bank that may be running around $800 to $900 million a year, plus the fact that they might be able to do something on the duration side, there will not be a significant amount of earnings hit to make this number work out for them. And the 3-year runway certainly gives them a lot of room to still stick to some earnings growth and not worry too much about exceeding the $700 billion asset size that basically puts them in the category 2 level for Basel III Tier 1.
All right, so we are drifting lower. Drifting lower at the moment.
That is a very strong underwriter. It's one of the rare banks out there that has delivered consistently 20+% in return on tangible common equity. And so for all those reasons, I think you should keep that in your back pocket.
All right, we appreciate those picks and your insights. Sean Sapsal, Carnegie Investment Council, thank you so much. Coming up next, economic conditions that have our next guest expecting to move commodities and which ones he has on his radar. That's next on Schwab Network. Stay with us. We'll be right back.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. They're not nervous, but I'm not nervous. Financially, I'm flight attendant in that situation. But when you need that, that's the first thing that wants to know God, guide, to help them through. So I definitely feel privileged to be in that position.
Each and every angle, the whole picture, every day comes closer on trading Thursday. Catch us right here at the New York Stock Exchange. Rate increasing only on Schwab. No politics, no noise.
All right, S&P is on a short-term sell signal for now. We're watching for a bounce. All right, VIX is starting to rally.
Low ticker -800. Extreme low ticker.
Ross back in the day, and he said, where's inflation? In economies that are printing money. And so a lot of people may realize is that we're above 33 trillion as a nation right now in public debt. But what many do not realize is that since the debt crisis ended just before Independence Day here, we added $2 trillion of additional debt to the bottom line, which is the equivalent of, and oh, by the way, 650 billion just in the last 30 days. 650 billion in a month. So we're looking right now at a spending state that is ultimately the only thing, in my opinion, that is really keeping the economy going. And so as we see the continual printing, and we just can connect here about banks, I have big concerns about these banks and where they're going to be headed, and the margin compression that's absolutely there because they no longer have capital maybe to pay lending with. Rates are so much higher, standards are so much more stringent. It's very challenging for capital markets right now to be effective in doing some of the things that we've seen in the past. So I think that we're going to see some inflationary things, especially with the price of gas going up and the Saudis and Russia kind of being in lockstep with all that and looking at depreciating the amount of barrels on a daily basis. So the oil production is one of those things that's going to cause inflation because deficit spending is out of control, unfortunately.
All right, the chop continues.
But it's because the Fed's no longer buying treasuries. China's no longer buying our treasuries. They're buying gold, by the way. Institutional investors are no longer buying our treasuries. And in Japan, our number one creditor is tapering off of that as they're looking to control their own yield curve. And so the bonds are just a supply and demand factor. If the sellers want to sell, the United States needs to print a whole bunch. If the sellers want to sell more than the buyers want to buy, the price goes up. And so I think that's going to have to continue on because we're not seeing a high demand right now for people just excited to jump into the U.S. dollar as we're looking at a November 15th.
U.S. 10-year back up to the highs, putting pressure on the markets. U.S. 10-year hit 4.996 yesterday. This morning, pre-market, it was up at, what was it, 4.9. Okay, this morning at 8:26, it was at 4.995. Basically 5%. Okay, so we're looking at bonds, yields.
So he's not going to do either. He's waiting for the lag effect, which generally takes 12 to 18 months to happen.
Yields up there at the 5% level.
And so, yeah, banks have challenges. We're going to print.
So it'll be key to see what it does next week. If it breaks through this level, like it did on Tuesday. Tuesday it broke out. Wednesday follow through. Today and yesterday hanging out near 5%. So this guy is talking right now. Makes sense what he's saying. If Japan isn't interested in buying our bonds, investors aren't interested in buying our bonds, then the price is going to go up. And that's why we have yields rallying. So
obviously higher prices to pay employees and smaller work weeks is going to bring prices up, which is inflationary. Reshoring or friendshoring from China, as we recognize that challenge, well, that's inflationary as new infrastructure.
All right, so we're just bouncing around here. Nothing to do. I'm looking forward to next week. My sense is that we'll have a better idea of what to expect. If the yield is higher, pretty high probability it is. So my 2 cents, reduce your risk. And if you need to, buy some hedges, like SPXU. Looks like it wants to break out. SPXU.
My vote is it goes back. I think everything pre-2020 was awesome, okay? But the reality is things have adjusted, and because the credit cycles touch every part of our market, I see this going to be as a rolling recession. I think we're going to have downturns and downturns and downturns as different parts of our economy face different challenges and weaknesses as it's sort of
All right, if you need hedges,
restructuring, and we're globally having a lot more challenges as well with supply chains.
All right, so we're almost out of time. So I do want to just get to what this means in terms of your investment strategy. You say
Sure.
It's all about riding bulls and taming bears. So how are you riding bulls and how are you taming bears in terms of what you're doing to your portfolio?
Well, number one, I think that's a good title for a book that's going to be coming out here pretty shortly. I'm about 35 days from done with that. But so the goal here is to understand, know when to hold them, know when to fold them. We need to understand how cycles
next week should give us a better sense of what to anticipate. So if you need hedges,
deploy capital today in a way that's going to avoid the big challenges that we're going to have in the bond market. Many people are conservative today and they're loading up with bonds. And I'm going to say that is a very, 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 well, that might not be the best idea. Some of these challenges that we have with higher rates, etc. So how are we doing it? Well, we need to be more individual in our allocations. We need to be specific in understanding how is the world changing here in the 21st century. And the world's changing right now because tech has been this great leader, and I definitely think we're going to see tech companies, continue to improve, and AI is amazing, and biotech's amazing. There's going to be some great breakthroughs. But if we look at where the S&P 500 is based on capitalization, only about 14% of the S&P 500 today is based on like commodities and like oil, gas, different metals and different miners and different places. It was about 50% in the 80s as we were ending this inflation cycle. So what I believe is going to occur is that we're going to see more of these commodity-based companies begin to get greater strength. They're going to become a lot more valuable and important because we're still building things, especially with the green new things that are happening. There are metals, there are commodities, there are things that are critical for infrastructure. And so
yeah.
I'm into ideas like that as an investment strategy, but it's really important to be hedged.
The weekly TTM is my big trepidation.
But it seems to also be lost like an elevator when things get bad. And so what we have to avoid is these major downturns, especially for nearing or entering retirement. And so, just wrapping that thought up, it's things like gold and silver, it's things like copper, it's things like uranium, it's things like gas right now that are ultimately going to get the United States into a position of strength, and they're ultimately going to give us the best in the future.
All right, David Strzelecki, CEO of Sound Planning Group. Always appreciate your insights. We'll keep an eye out in 35 days for that book. Thanks so much.
Appreciate it. Thank you.
Up next, a new name in the EV space is going public. The chairman of EGO joins us to talk about what their biggest backer calls an iPhone on wheels. Stay tuned. We'll be right back.
All right, what are we going to do here? We're going to drop off, or what the hell are we going to do?
All designed for investors like you, with no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is
Dollars at the high of the day. VIX at the highs. Pretty interesting. VIX at the highs. We haven't seen VIX up here in a while. Okay, VIX.
It's time to look forward
Find the next track.
Okay, so VIX clearing some levels. Last time we got to 21. Last time we got here was the beginning of May. The beginning of May. And at that time, early May, we just had this little dip lower and then the markets took off. So that's pretty interesting when you think about it. Even though VIX was at highs back here in May.
Available anytime, anywhere, on any device.
And then it backed off.
Welcome to Morning Trade.
So that's what we need to see. We need to see VIX back off. Longer term momentum on the SPY somewhat conspicuously accelerating now. I don't like the way this looks. I was hoping that we would hold above the 10 EMA to start the week. We continue to fade. So hedge, reduce risk. You know, you want to have cash when we do finally find a bounce. It's unfortunate. I thought for sure that we were going to have some follow through off of that S&P signal with stocks, most stocks washed out and below the 50-day. We're still holding off of that late September signal. What's more interesting at this point is the number of stocks trading above their 200-day. That made a lower low. So having cash on hand and hedging is going to give us an opportunity. Hopefully before the end of October, early November. It looked like we were going to bounce back up to the 200-day, got shortchanged on Tuesday and reversed. So all of this is obvious now in hindsight. What's not hindsight is support was here back in March. It was a little higher in May. And the weekly just looks weak. Okay, what if this comes all the way back down to October lows? Are you prepared for that if we come back to October lows?
In Europe, you can actually
Mentally? Okay, let's go. Something I was looking at earlier. Okay, so here's the yearly. Okay, so we go through these periods. When I started trading was in 1987. The markets are up almost 2,500% since then. We go through these periods of trending and consolidation. Trending, we've been up for 11 years and started going sideways. Is this where we start to go sideways? A lot of people are starting to talk about sideways because of the recession potential. Going into the year 2000, we started consolidating before we got there. And then into 2001, 2, and 3. Okay, here's 2000 right here. All right, so that was our reversal in 2000. We moved lower for 3 years before bouncing. You have to be prepared for these things. I don't think there's any reason to be buying anything at the moment. You know, longer term, if you have hedges, you have a mind for hedges or maybe credit spreads or whatever it is you're going to do around your position. 1987, this is where I started trading. Last month of the year, 1987.
Look at the number of factories, which first one in Germany is already built and in production.
Okay, now we're starting to bounce. Maybe we run this into the close. That would be kind of cool. It's very choppy though. Above and below VWAP. The bears had it in the morning. A grind higher. Looks like the bears managed to monetize more puts, even though we were rising, and we dripped lower. Now, if we can get a rally here, it'd be awesome. Watch the VIX. VIX at 21 is pretty high. We've reversed here before back in May. So May was the high, last high, 21.
Elon is absolutely spot on at this point. However, this is something that we've been preparing for, given regards to the choice of technology and the capital efficiency that comes with our end-to-end.
Dollar General, you like Dollar General? Let's take a look at it. Dollar General. Let me just look at the options on this one. Dollar General. Dollar General. Yeah, David, you got the 50-day overhead. So if it clears 119 and then can get above the 50-day, this downtrend, still in the downtrend, the 9 is crossed up through the 21-day, but the key is to get the 50-day to turn. That probably wouldn't happen for 6 weeks or so. It's going to take higher highs and higher lows off of this level. If you do a 5% yield, lock it in for 6 months, you're probably going to do fine with your cash. Oh, the rain's coming down. My son's going to be wet. They don't have any cover for them when they get out of their school. The wife's going to pick them up. You know, well, there is the thought that, we've been moving lower August, September, October, 3 months. We're due for a bullish month. All right, let's take a look at NYSE. So also consider a money market or a 6-month CD. Maybe you can get a 3-month CD or something shorter and just, change them. But to put your cash in that instead of, trying to put it in the market. Because if I'm going to put anything to work in the market, I want to sell premium to give myself a dividend. Because we don't have much in the way of follow. Let's look at XOM again. That has earnings next week. XOM pulling back. Okay, NYSE, the McClellan volume oscillator is now turning. It's in a neutral zone. Last time we got this here, we have a higher high and a higher low. We're in the neutral zone, so this could go either way. We're making a lower low, or at least that's what they're showing into the end of the week. VIX is staying at the highs. I don't like the market right now. We don't have a trend except for the fade that we've had in the markets. Luckily, it's been pretty contained. It's not like a big sell-off. although the weekly would suggest otherwise if you look at the weekly time frame. The SPY, okay, and the S&P. S&P has already hit the 200-day. S&P already hit the 200-day. Yeah. Good idea. Say, Carmen. I knew you were smart there, Carmen.
Still holding up above the October lows, right around the lows from last month. So kind of limited in terms of follow through. Back down to the 200-day moving average. This comes with rates on the rise, tensions in the Middle East after comments from Fed Chair Jerome Powell, and I think investors kind of just trying to push forward amidst multiple headwinds that are becoming increasingly difficult to show off.
When you talk about rates on the rise, you're of course also watching yields on the 10-year Treasury. It's back below 5%. Of course, hit that level for the first time in 16 years, I believe. Yesterday, what's the significance of that, and where does it go from here?
Well, the rate of acceleration we're seeing for one is significant, and where we go from here, if the trend is your friend, continuation more likely that change. If those old adages come through, then yeah, I think that we would continue to see momentum to the upside in terms of yields. Let's begin with the future side of things. I want to show you what's going on with the treasuries because we oftentimes hear about oversold, and we hear about these conditions that people signal or words that people use to signal conditions and a market that's ready for a bounce. We've been hearing a lot about those words recently, but we haven't really seen that bounce, right? And any bounces that have come into play have been short-lived. So again, another instance where the trend has been your friend to the downside in terms of Treasury futures. Here's yields this week: the 30-year on the left to 5.14. Look at the 10-year on the right to just shy of 5%. You can see off those highs that we saw earlier today, but not by much. And it's been a story of 2 steps forward, 1 step back in terms of yields. And I just want to point out again, talking about those headwinds that are becoming increasingly difficult to turn off. This is it, right? Rates to the upside, crude oil at stubbornly elevated levels. You got the dollar, which hasn't been a major factor, but geopolitical tensions on, indecisiveness in Washington. It'll be interesting to see if the market continues to shrug all of that.
Yeah, I knew you were a smart chief there, Carmen. Yeah, so Carmen telling me she's been doing 3-month CDs, money markets at Fidelity.
Thanks for having me, Caroline.
5% is a nice yield.
Talk about some specific names in this space. Just want to kind of get your call on the overall sector because it certainly has had some winners this year. But from a sector performance, not all that impressive. Down about 5% healthcare. The S&P 500 healthcare sector down about 5% year to date. What's your take?
Okay, we're drifting lower.
It depends how you want to look at it. I mean, a lot of these have nice dividend yields, so as Treasury rates rise, they're less attractive. There was also this view.
Low ticker -800.
The hedges I mentioned before, all of them are making new highs. Vanguard 5.3. Okay, that's pretty good.
Big pharma as a safe haven maybe is underappreciated. They're highly liquid. They're a cash proxy. Super diversified in terms of product portfolio and geographic positioning. So I think investors might want to take a look back and see what makes sense in the industry.
Altria, you're talking Altria?
A flight to safety in healthcare as we approach year end?
Look, if you're any sort of fan of Ray Dalio, he's been for a lot of reasons. Your guest earlier. In terms of talking about treasuries, I think he's spot on. I think yields are going to continue to rise. And I think as that happens, there's going to be more pressure on the system. abilities.
Okay, so let's talk about some individual names. We heard from Johnson & Johnson earlier this week. It's up today. And would you be a buyer of Johnson & Johnson?
Well, listen, we can't make buy or sell recommendations. We're not a broker dealer here at Third Bridge. But what I would say is you're absolutely right. If you look at its performance relative to the S&P benchmark, S&P 500 benchmark, it's trailed significantly. And then you look at how it performed in Q3, and I think anyone reasonably would say it's not getting a fair shake. This is a $370 billion market cap company that grew sales of over 21 billion by 7%. And that's a nice
Yeah.
for that type
Yes, you did.
And then you look at their cost controls, they're quite evident. They've got a 19% year-over-year earnings growth, putting up $2.60 of adjusted EPS and beating consensus by 14 cents. That's a name I definitely put on my list of companies I'd want to watch.
Okay. What about in terms of the weight loss drugs that we've been seeing, or some of these drug makers that have the weight loss drugs? They've obviously been the big winners this year. How much of that hype, if you will, do you think is priced in at this point? Or do you think there's still more room to run on the weight loss potential?
Yeah, not to have a cop out here, but it depends on your investment timeline. I think when you look at GLP-1s, they work. They're very safe. Tolerability can be an issue with nausea and several other palatable effects at times, given how the drugs work in terms of the mechanism of action. But they do work. It's nice to potentially lose 20% of your body weight while maintaining blood sugar. I think what's important to take into account is the two major players at this point, Novo Nordisk. They've got two drugs, Ozempic and Wegovy. Both are from the same active pharmaceutical ingredient, which is semaglutide. Ozempic is for type 2 diabetes. Wegovy is for weight management. Then we have Eli Lilly. They have Mounjaro. That is totally indicated for type 2 diabetes. So there are quite a few folks who have type 2 diabetes that are also overweight. But what you have to imagine is these are expensive drugs. They run about $1,000 a month. So if you are not type 2 diabetic, you're going to be paying it out of pocket.
Okay. There's also this deal that we heard about between Merck and Daiichi Sankyo. Shareholders of both companies seem happy. Daiichi up about 24%, but even Merck is actually higher on the news, 2.5%. What stands out to you there?
Yeah, this is an interesting deal. It's roughly $5.5 billion up front. There's some nuance into how that gets paid out, but the deal ultimately could be worth up to $22 billion, and it's focused around three they seem pretty promising. So there's an excitement around this deal. Obviously, as you mentioned, Daiichi's up quite a bit today, and Merck's on tap to report before market open next Thursday. I'd say what we're focused on, of course, is Keytruda, their blockbuster oncology drug, as well as Gardasil 9-HBV, which has been really benefiting from very strong uptake in China.
All right, we're almost out of time, but anything else that investors should be considering when they're approaching the healthcare space right now?
All right, markets are just sitting there chopping around. Just chopping around.
Phenomenon, if you will, is having quite a bit of lateral effects. You saw Fresenius and DaVita both tank on Novo Nordisk slow.
Speaking of stocks being cheaper, let's go take a look at S&P. All right, let's look at the S&P.
Showing Ozempic and low dose 1 mg in slowing or stopping the progression of chronic kidney disease. So obviously the dialysis providers took a hit. You're also seeing a lot of pressure on names like Dexcom, Insulet, and Tandem, which are either insulin pumps or...
Okay, here's the S&P right now.
So it's having a lot of...
Okay, so you can see the black line. That's where price is right now. Okay, price 42.38. The red line is overvalued at 20 PE. 15 PE is fair value. That's 27.15. 27.15. So somewhere in between there, I don't see us getting back there, but what I'm looking at is this lower high, and maybe somewhere around 4,000.
Couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children.
So, bottom line, find a vehicle, put some of your cash in a vehicle that pays you either a nice dividend. Mondo's in Philip Morris now, Altria, MO, and that pays an 8% dividend. And you can get CDs, 3-month CDs, 5.2%, 5.3%, somewhere around there. I'm not really fearful of the markets, but the one fear I do have is there's going to be a lot of people, perhaps a lot of people who get caught if the markets do pull back like it does in recessions. The real estate bubble, we went into a recession.
Insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free.
All right, let me go back to S&P.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Yep, it's about quality of life. I agree with you 100%, Mondo.
Where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network. Welcome back to the watch list. It's time for our midday panel, which today is looking at payment stocks after earnings from American Express. Joining us for that is Dominic Gabriel, Senior Analyst of FinTech and Specialty Finance at Oppenheimer and Company. We're waiting on Sandra Cho, Founder and President of Point Wealth Capital Management. But while we wait for Sandra to join us, Dominic, let's talk about the highlights from American Express's earnings. Investors not very impressed. Share is down about 5% right now negative on the year. What's the biggest takeaway as it comes from these earnings?
Nate, I think some of the biggest takeaway, and we've been talking about this for the better part of 9 months, where the beats have to come from discount revenue. You really need to have them stem from volumes, discount revenue, maybe some net card fee growth. But if the beats are going to come from net interest income because loan growth is high, that's not why you're paying 13, 14, 15, 16 times earnings for American Express. And so even though they showed really excellent efficiency gains in the quarter, even though they beat us on total revenue growth, investors are really looking for discount revenue to stay elevated.
All right, we'll continue to grovel down here near the lows.
Dominic, is that why the stock is lower today? Because as I said, shares off about 5% right now. Yet you're keeping your outperform rating. So something tells me you'd be a buyer of this dip.
Yeah, this could look a lot different on Monday, just for the record. I don't like the way the weekly looks, but we could look a lot different.
They also did show some upticks in credit losses that are a bit bigger and above 2019 now on net charge-off rates, this quarter. But they're still doing much better than peers when it comes to credit quality overall. The arc of delinquency formation at American Express is significantly better than most of the peers. And so that's why we have the outperform. We are cautious on this space, but versus others, we think it's the best pick.
All right, Dominic, we're sticking with you because we're having trouble connecting to Sandra.
Sure.
But let's talk about those peers because we will hear from Visa and MasterCard next week when they report quarterly results. How could those reports look different from what we heard from Amex?
Yeah, sure. So, look, I think the key from this entire earnings season, including American Express, and maybe I should have said this.
All right. So, this could look completely different next week.
And that's part of our thesis and why we've been cautious on both fintech and payments, and especially finance. We cover the cards. And so we're seeing spending slow down. I think it's going to go to low single-digit growth. That's below consensus. We're typically below 2024 estimates for both Visa and MasterCard, greater than 3% EPS. So, look, we are very cautious on this space because of that fact. Because again, when you're going to be paying high multiples, you really need to see that revenue growth. Now, Visa and MasterCard have a lot of expense levers left. Some of the payment processors probably not as much, and so it's going to depend on how much pricing you put through in 23, how you're going to lap that in 24. For instance, we like Global Payments right now because their volume has been matching their revenue growth, and it hasn't been from pricing increases, and so it's to us a little bit more durable. But it's a tough setup, and consensus is a bit high, in my opinion, for 24, given the trend.
Okay. Want to bring in Sandra Cho of Point Wealth Capital Management to the conversation. So, Sandra, Dominic was just talking about in the overall payment space, really just seeing signs of slowdown.
Yep. I'm expecting the markets could do exactly the opposite. So look completely different than what it does right now. After OPEX, that's the biggest thing. We got a lot of puts and calls expiring. Okay, so we have to keep that in mind. All right, so keep in mind, I'm going to post something here, okay?
Sandra, would you be a buyer on the weakness that we've seen in American Express, Visa, or MasterCard this week?
I think it's important to be diversified and have exposure to merchant services and whatnot. But like I said, I'm a bit cautious.
All right, Sandra Cho, founder and president of Point Wealth Capital Management. Glad we could get you into the conversation. Dominic of Oppenheimer, thank you so much as well. Appreciate both of your insights. That's going to do it for the watch list. I'm Caroline Woods. Thanks so much for watching. Stay tuned because Market on Close with Oliver Rennick is next on Schwab Network. I'll see you there. Have a great one.
All right, so we're pulling back a little bit more.
Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all the financial tools and support to secure your financial future. That means a lot for my community and for every community.
I'm Nicole Catalidi, live from New York Stock Exchange, Texas, on Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
At each and every angle, the whole picture, everything comes
full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to your information.
Broadcasting 24/7 from the studios in Chicago
And from the heart of Wall Street.
Our today's market insight.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics, no noise. Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week. SchwabNetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investment trader.
Every market day.
Binge watch the market with Schwab. Tune in 24 hours a day, 7 days a week at SchwabNetwork.com for the longest favorite streaming service. Schwab Network, available anytime, anywhere. Live and free. Schwab.
Being part of the latest commodity action on futures with Ben Lichtenstein weekdays, and he's taking the Schwab Network. Available anytime, anywhere, on any device.
I'm Oliver Rennick. Get ready to cut the cord. Market on close is coming up. Stocks are near the lows. Pressure coming back on equities. Having some trouble this week. We're heading into a weekend with risk off tone across the board and S&P 500 futures right now below 4,300. So we are back down near the very lows since June. Basically, we're fighting for that longer period that marks the speedy move higher from the summer after Nvidia's blockbuster earnings in late May. So that's the perspective. Stocks are really trying to hold their ground. Equities trying to survive in a market where yields are blowing out to the upside. Thriving in this yield environment looks like it may be out of question, but can they survive? That still might just be up for grabs because stocks are trying to hang on here. And we have had a couple nice earnings from companies like Netflix, and there's a lot of excitement and hope that Meta and Alphabet will continue some of that big cap spend. But of course, we took a hard hit with Tesla yesterday, a major breakdown there. We have a great show coming up. Jim Pack as we go into the weekend. So don't miss it. 90 minutes there. It's going to be great. They're coming up. Dollar's still down on the session. Bond yields are down too. We've got a little bit of a different type of risk off today. Just firstly, the thing you'll notice on the board is that futures are actually up in the bond market. Yields are down, so you can't really necessarily blame it on yields today. But of course, it has generally been the main culprit as the move in bonds has been pretty extreme, and we're going to be going into the weekend with 5% on our mind ahead of next week's data, and a lot of healthy beats that at least can give us some comfort. The economy is far from the clip that many thought it was going to be at this juncture. A few interesting things happening, though, in the mix here. There is a little mix-up, I think, in some of the relationships that are being challenged right now. Mainly look at the fact that gold has been firming up. Off a little bit from the highs today, but short move here in the past week and totally antithetical to what generally moves gold, which is real rates and interest rates. Usually when yields are blowing out like this, you can...
Yeah, Schwab's not going anywhere.
Squash, but for some reason...
S&P just with less than an hour to go, 56 minutes to go. Market's just moving sideways, chopping around.
Gold's on a decent little upswing. Here's the only catch, though, in attributing gold's move to geopolitics, is that the move in crude oil, which is kind of our main lens through which we view the threat of geopolitics on markets and inflation and the main macro discussion. Highs and higher lows in the second half of this chart, which goes back 20 days. But also you can see we're still below the 95 that we put in earlier this year. So WTI is range bound, and for all the talk and the speculation about what could come of the geopolitical situation in the Middle East, hopefully things start to worsen from here, of course, but the market right now just doesn't seem to really corroborate the notion that things are really going to get awful here. If that is, you're using crude oil as a gauge to assess that situation, and a lot of traders do. So WTI staying range bound is encouraging, I think, on the geopolitical front. And there still is another wild card happening in the background of all this. That is Bitcoin. So some of our secondary kind of tertiary asset classes to watch here, gold, crude, Bitcoin, there are some things that don't necessarily line up. Like Bitcoin rallying when stocks are coming off as hard as they are. It's definitely a correlation break in Bitcoin's favor and could be attributable to ETF rumors and hopes and high probability that there's going to be a spot ETF. So maybe some kudos here to Bitcoin holding up a little better than I would have thought it is based on the ETF stuff. Of course, Bitcoiners are also going to try and spin in some of the macro situation, as of course we've got a couple treasury options that have gone awry. But generally, there still is more that we need to see fall into place before I'm convinced of that story. We're going to talk about what role the Treasury has played in market volatility with markdown coming up. A few other things I want to put on the radar here. Number one is a lot of the tech news today is earnings based. It is coming from the Solar Group, which is maybe one of the biggest policy these stocks have just been getting creamed since a lot of them were included as recipients of some of the spending from the inflation bill last year. Absolute wreckage in the sector. But the other one, probably more important at the same time thinking about, is the regional banks. The group is down 4%, cutting through local lows, not back all the way to the March lows, but a little uncomfortably close. And so even though today's session isn't quite the same as some of the other risk off we've got, we need to pay attention to because a few of these earnings definitely are a little bit of a yellow flag. Let's talk about that regional situation with our Alex Conte here with me in the studio, host of Next Gen Investing. For those that missed it this morning, Alex, this is really centered on Regions Financial, ticker BARF, which is cutting below the March lows. So take us through what happened here.
Yeah, worst move since March as well in terms of decline, down 12.5%. This actually improved as the day has gone on. This is not on its lows as we speak here. So something to monitor on that front. But buyers coming in down $2 right now, $14.40. This is, as you mentioned, on their third quarter results. These results were misses on EPS, comes in at 49 cents versus the 58 cents estimate. Misses on a couple key kind of internal metrics, though, that are really sensitive to the financial sector, and that is net interest income, $1.3 billion, the estimate at $1.33 billion. Now, granted, it's a modest miss, but in the scheme of the financial world right now, this has been a bright spot for big banks like JP Morgan, like Citigroup, and go down the line. So the fact that they missed what was already a relatively low bar being set by the street for Regions Financial in the landscape that big banks had crushed these metrics is critical. They also cut their year forecast for adjusted revenue from 5 to 6% growth from 6 to 8% growth. That is notable, alongside non-interest interest expenses up to 9.5% in terms of its growth versus what was before around 5% for the expectation. Now, we talked about this morning, Oliver. I think the critical piece here is that comparison between the biggest of the big banks and these regional banks that are certainly not modest. They're very large banks in their own right, but compared to JP Morgan, this is considered a smaller bank.
Sure. And it's still one of the bigger, smaller ones. This is an S&P 500. This isn't a Russell stock.
Exactly right. It's publicly traded as well. So we're not talking about the local, savings and loan institution. We're talking about a big regional bank. However, these regional banks throughout this year, post kind of March and April uncertainty, started to lose confidence in the depositors. We saw huge outflows from these companies into places like JP Morgan Bank on the heels of some of the failures that we had seen. Now, as a result, to entice depositors Financial or some of these other banks, they have been paying more on free cash. So their interest that they're paying on deposits is going up substantially. Companies like JP Morgan that have a plethora of inflowing deposits have not had to do that. So they're looking at very, very different dynamics. So what is a windfall for a company like JP Morgan at the moment is actually the exact reason the others are struggling. So combining that with the fact that maybe those who are a little bit more risk on the credit spectrum are also going to some of these smaller institutions just simply for access to credit in what has been objectively a little bit tighter lending environment over the last few months. They also had to increase their provision for credit losses versus the expectation comes in at $145 million versus $135 million. This is again very divergent from what we saw from some of the other institutions that were actually showing much smaller numbers on those provisions. So it's really become a story of the haves and have-nots within these banks, and these dynamics are putting continued pressure not only on regional banks, but the entire sector.
Two things. One, about its size relative to the big ones. It is one that's going to have to change and abide by some new regulations from the Fed that actually just got pushed back a little bit. But that's something else to keep in mind. They are going to have to be watched a little bit more closely like the big banks. Two is that even though their lending did increase from a year ago,
all right, we're not doing anything exactly as expected. The last hour or so, it feels like we're just going to cruise along. VWAP, we just dropped a little bit lower into the lower half of today's range.
Like we've already seen for big banks like JP Morgan, as opposed to like big explosive systemic solution to the problem.
Yeah, and it's one of those situations where further consolidation can be beneficial for the industry, but then it's the question is that beneficial for the consumers? And it continues to always be sort of that cat and mouse game, that back and forth pull. But clearly, right now there's a biggest deposit institution and those who are hoping to.
Yeah, Monday, not a bad idea. If you don't do it already, maybe taking some of your cash and putting it into a 5.3 or 5.5% 3-month CD. I see Schwab has Corey posted in the trading room.
Very much as we do have more of these companies set reporting coming in. Thanks on how it's important to hear. We're still down 12.5%. Let's bring in Mark down off of behavioral macro, joining us here to try and piece together some of the puzzle. Mark, kind of down to the brass tacks first on the phone with us per usual here. And good afternoon, Mark. Thanks for coming back.
Good afternoon, Elder. Thanks for having me, man.
Hey, let's first talk about rates, obviously. Is there anything stopping this train of the bond market in your mind?
Potentially, I mean, some of the first signs of hope, at least if you want to call it that, yesterday when there was an outside reversal of the 2-year, and that was followed through on a little bit today by a bid in the back end in the long bond. I'm just gauging by futures. This morning, pretty ugly in the long bond futures, and that
it reminds me.
Over the course of the day, even as equities deteriorated. So if you take those two things together, then the first two initial signs of hope, right? It doesn't mean that it's going to necessarily turn around, but finally something to hope for, because honestly, for the past couple of weeks, it's been a one-way train.
How much of this move has just been an effect of the market's sort of obsessive pricing of rate cuts in an economy that's just too strong?
Well, I think there were a couple of things that hit at the same time. So you had, for a while, the Treasury wasn't allowed to issue because they shutting down the government and the debt ceiling debate and all that kind of stuff. And when they opened things up, they had to issue a ton of T-bills immediately, replenish the Treasury general account at the Fed, et cetera. And that scared a lot of people.
Yep.
Deficit not shrinking the way that it was planned to have it at the beginning of this year. And people got a little bit scared, a little bit nervous. And then we had kind of a catalytic moment when the recessionistas finally gave up the ghost. They said, okay, it is going to be higher for longer. The economy is much stronger than we thought. inflation is coming down, but they really can't cut if the economy is this strong. So people were looking over the horizon at a lot of supply. They saw that the hopes for recession were diminishing or had diminished significantly, and they said to themselves, "Why should I hold a 30-year bond at 100 basis points through a T-bill rather than 100 basis points or so, whatever it was if there's not going to be a recession? The only reason you want duration is because you think the economy is going to slow down, right? And if it isn't, then you need to compensate me more than you would in a T-bill for me to hold that duration." And those two things kind of hit together, and we started this sell-off. And then once that happens, narratives kind of take hold, whether they're true or not. They can gain traction, and then they feed on themselves. They're kind of self-propagating for a while. Particularly positioning is offsides, and of course it was with so many people looking still for a recession. And then we heard about geopolitics and the unsustainability of the U.S. debt, and people want to get away from the dollar. All these things, it gave more of a bid than you would expect to gold and even Bitcoin a little bit, because those people believe those stories, even if they're not, even if they don't end up being true. And so that narrative took hold and fed the impetus to sell treasuries, right? The initial reason for selling treasuries. And that's kind of where we are now. At the long end, the yield is getting up close to where the T-bills are. So hopefully that will stem some of the selling. And of course, if we were to get any kind of sign of a slowdown in the U.S. economy, that would help too. That's my belief, but it needs to play out.
I want to drill down into one of those narratives a little bit more here for a second, which is the role of the Treasury spending, the deficit, and the options as a catalyst for higher yields. Mark, I've offered up the strength of the dollar as a counterpoint to the deficit as being a cause for higher yields. What else should we look to? How much of a role do you think that is playing, just outright supply and the government as a source of volatility for bonds?
Well, the supply is a factor in and of itself, but usually I'm very dismissive of supply, because over the course of my career as primarily a bond guy, I've seen supply scares time and time again, and nothing ever happens. Changes in demand, based typically on economic expectations or expectations of what the Fed will do, tend to have a much more powerful effect on bond yields than changes in supply, even though the changes in supply make for nice headlines and then can scare us in the short term. I've even seen in the high grade market where supply leads to spread tightening, because it kind of it awakens the sleepy high grade traders and said, "Oh, that's attractive. Maybe I should buy some of that." So supply doesn't always have the effect that people think it does. But right now, the confluence of the kind of a backlog, there was a backlog of issuance that didn't get done because of the debt ceiling debate. And then we have a larger than expected together.
Oh boy, this is just really boring.
Kind of all hit at once. And you can make the story spicier by talking about QT. You can make the story spicier talking about central banks that aren't buying treasuries anymore, even if most of them have not been buying them for quite some time. It adds to the story and adds to the narrative. So it's there, but if you look at the numbers themselves, you see they're not really issuing that much in the way of bonds, right? They're issuing actually less bonds than normal. What they're issuing a lot more of is T-bills. Yeah, of course, given the narrative I just laid out, people, if they say, why do I take duration risk if I'm getting paid less and no recession is coming? I'm going to go into T-bills. Some of those people have just been selling the long bond and going into T-bills. That's a lot of what we're seeing. But the issuance of bonds themselves has not been particularly high by any historic standard.
Okay, so even if a few options didn't go perfectly, the correlation between supply and the yield just doesn't line up with the net issuance. It's actually not come off the high. This is a quarterly chart you sent me from someone on Twitter, so it's there.
Keep thinking we're going to go down to 4,300, 430 before bouncing. That would mean maybe Monday.
My pleasure. Appreciate it. Yeah. Really good conversation there, putting in perspective what's happened with bonds. Let's keep talking some earnings. We're going to trade Amazon and give one fund manager's perspective on
Low ticker minus 800.
and having equity exposure. We talk about an ETF, TIX.
All right, more weakness. Okay, let's go take a look at the S&P. Pushing a bit lower. All right, we're closing at the bottom of this weekly candle, so that's not good. Started off the week at the high, came back down, took out the low. That's a bearish engulfing on the weekly. At the 200-day, 4,200 is the next level. And there's a number of pivots along here. Support. Wow. So 3 months down, 3 months down. We're due for a bounce. We got a lot of options expiring today. Monthly OPEX.
Low ticker minus 800.
Okay.
Peace out, Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern. Oh, blog now.
Let's keep talking some big tech and mega caps that have been doing pretty well. Amazon did pretty good in the last few weeks, but had a great year-to-date and as earnings coming out. Today, we'll talk about how to invest in the sector with Nick Greenhow joining us with Shelton Capital as a portfolio manager, $500 million Shelton Equity Income Fund. And you've got a pretty unique approach, I think, to both holding the stocks and also trying to generate some income, Nick. How does Amazon fit into that strategy right now?
Absolutely. It's Oliver. Thanks for having me today. Amazon certainly fits in, with any of the large cap funds. You expect that they're going to have positions in some of these big FANG names, the Magnificent Seven, and how well they've done so far this year. So, especially with them coming into earnings next week, next Thursday, we'll be coming out after the bell. That short-term volatility is elevated. That's something to look to take advantage of in the options trading space. So you're going to get a lot more attractive premiums on a short duration basis and really be able to get some attractive annualized cash flow by taking advantage of that support.
All right, looks like we're going to be moving lower. Okay, taking out the lows. Probable.
That's correct. Yep, that's correct. We own the stock and not necessarily with Amazon or with all of our other holdings. A big piece of that is we're looking for that potential for capital appreciation as well as, on dividend payers looking to harvest that dividend yield as well. So primarily looking at selling covered calls, not really on the flip side of things at this point.
Okay. How do you figure out what strikes? Is it discretionary? You guys
Low ticker minus 800.
Set it and forget it type thing, or is this just your eyeballing options based on where volatility is going into the event?
So we have a number of criteria that we look at as far as picking the strike. We want to get at least 1% of the underlying stock's price and cash flow. So with a name like Amazon, trading around 125, we need at least $1.25 to entice us into that trade. Beyond that, we're going to be looking at the cash flow and how it annualizes on a duration basis, as well as, we want to leave some room for capital appreciation. We don't want to go out here and write after-money contracts. So,
All right, so we continue to exhaust the bulls. Got lots and lots of puts down here to expire, and much of it is in the money. So we got a half an hour to go. Half an hour to go.
Is this the approach for every piece of the fund, or do you only do this for certain companies at certain times?
So we do sell calls against pretty much every position in the fund. We don't typically go out and fully cover every position. Usually have about 30 to 35% of the underlying shares with calls written against them. But especially with how much option volume has been picking up, S&P 500 names in general are going to have pretty liquid options chains. I was looking earlier today, and there's been a lot of zero-day expiration trading on SPY. There's 4 strikes of contracts expired today that had over 1 million contracts in volume today. So, with the increase in options trading activity, liquidity and options market viability is not much of a concern. So we're looking to write against pretty much all the holdings, and the coverage level, duration, how far out of the money we get, that is going to be dependent on security basis. But we write covered calls here.
Okay. And the risk then is that the market just totally rips to the upside. You'd underperform then. I would guess that if the market's going down, you're very likely to outperform, at least in your specific stocks. I guess the fund as a whole depends on which companies you're in, of course, but the literal 1-to-1, because you've got the call you're selling, you're going to do better than straight downside.
Yep, absolutely. You're absolutely correct there. I mean, the opportunity cost of covered calls and the stock doubles so far this year, for example, we're going to miss out on some of that upside. We're selling away unlimited upside. There's a reason folks are paying the premium they are on these calls, and it's to have some upside potential in that exposure. So you're right. If the stocks just go ripping straight up, we'll miss out on some of that. But as far as the downside buffer, you receive that premium, which does provide a buffer if the market turns south. And just using last year as an example, the market overall was down a little over 18%. EQTIX is down about 10.25%. So those premiums that we're generating can help buffer downside. It is an equity-based portfolio. The market goes down 18%. We're not going to be up, but we're looking to at least limit that downside and mitigate that to what extent possible.
It seems like there is sort of a quality factor bias in your biggest holdings. Does that factor into your analysis? If I were just kind of eyeball it, you got a lot of different sectors in there: healthcare. You got some biotech. I mean, you got big tech in there too. It seems like these are generally cash flow producing, positive earnings businesses.
Yep, absolutely. So we do look to be pretty sector neutral relative to the S&P 500 value index. So we are going to have exposure to all the different sectors, and looking for good names and strong fundamentals is a big piece of the approach when we're looking at selecting equities for the fund. We've got, like you say, a lot of downside exposure. We have capped upside. So we're not looking for the high flyers. We're not looking for those stocks that have that volatility where they're, going for a home run. We're looking for good, stable names, good cash flow producing names, very mindful of the downside of holding the equity and having capped upside and that atypical, pattern of returns for a covered call strategy. So very value tilted.
All right, there it is. Nice taking care of your earnings next week. Thanks a lot, Nick.
Absolutely. Thank you.
Sure thing. Shelton Capital, EQTIX is the ticker of the fund. Sells the calls and staying long. Amazon in the next week's report. We'll go back and keep the options talk going. Tom's got one bearish trade for us and 2 bullish in today's session. Look at AT&T navigating its way through the storm today, up again.
remember when I first started flying, and we would experience turbulence. I would watch the flight.
All right, we're just going to sit here at the low. Looks like we got 29 minutes to go, 29 to go.
The relief that comes over people once they know they've got a guide to help them through. I definitely feel privileged to be in that position.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, any device. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennie.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
AT&T popped out earnings this week. Tom was one of our winners, and it finally got off the mat of 52-week lows. You know, follow through today, even as the market's down. So, the sell side of this company?
Yeah, I got upgraded after that report. We got EPS revenue. They got it a little bit higher. Margins a little bit better. Net ads were a little bit better. Now they've been getting their lunch eaten by T-Mobile at this point, both Verizon and AT&T. So this is probably a pretty good reprieve for investors in the stock because this stock's at the same level it was 20 years ago, Oliver. And you know what? You take into account the 7.5% dividend yield with the stock falling this much. It's historically been around 5%. That's the only reason to own it at this point. But a pretty good report. Upgraded today at a Scotiabank. They put a price target of $18.50 on it. They said an improving trend. So some positive news here for AT&T investors that have been taking it on the chin. Still off 16% this year, but rising over 7% this week. Saw some call buyers in there today, Oliver, out in the November 17th monthly cycle. So 28 days till expiration. They bought over 15,000 of the 16 strike calls, average debit of only 38 cents. So a lot of stock like this that had a 7.5% dividend yield. A lot of people own it for that yield. That means there's not going to be a lot of option premium and out the money calls to the upside because you've got a lot of people writing calls against their long stock position to kind of take advantage of the yield by owning the shares, then also creating some yield. But they only paid the debit of 38 cents for 15,000 of these. So that break even of 16.38 over the next 28 days, that's 6% above the current share price in there with call volume double the normal daily average volume that we've seen over the last week.
Okay. So some interest really building here.
Yeah.
First time in a while, see if they can follow through with it. As there's a nice little basing pattern it seems like trying to form in the stock, but until we get through, 16 bucks or so, then we're still stuck in the lower half of where it's been the past year. But we moved real fast this summer from AT&T down from 20 bucks to 13. So, I mean, we'll get through that 15 and maybe we could be moving quickly if bulls get what they're looking for, whatever it is they're looking for.
Good luck. I mean, cross your fingers because
it's still not like a big growth engine. All right, let's talk Carnival.
Yeah.
Right, we got another bullish trade here, which we haven't talked about the cruise lines as much that much this weekend. Another shame.
It seems like between January and July, that's all we talked about was airlines, cruise lines, some of the travel companies. They were hitting 52-week highs, some of them hitting all-time highs. But we've seen a pullback of 44% over the last 3 months
in this stock. You see that right there. Yeah, it's falling apart. Right. Now, if you listen to the commentary from these...
All right. Multiple times we tried to get above 42.50. Couldn't do it, but for a brief amount of time, dropped back down below VWAP. So I'm not surprised. There's so many puts down here. We're put dominated. Next week should be a little bit easier. We got all these puts expiring today, and that'll mean that dealers will be able to rehedge. We'll see how calls and puts fill in next week. That'll start Monday, Tuesday, Wednesday, kind of like the last time in September OPEX. We waited for that week to expire for us, and we watched what calls and puts filled in. We did fill in a lot of puts, more puts than calls, and of course, into this expiration, very put heavy as we're below zero gamma. So next week, a different look. I did buy some CDs on 3-month CDs on Schwab.
On a stock that's priced at $11 isn't that much on a dollar basis. So you don't need that big of a move. If you just look at it on a dollar basis, but percentage-wise, you need 20% jump in there. It's below its 50-day, it's 100-day, it's 200-day simple moving averages. RSI on this one at 23. I'm wondering in the next few days if we don't, because the economy is still robust, right? We saw retail sales data that's good, jobs numbers are good, but watch for over the next week or two a potential catalyst if oil prices pull back even maybe 5% or something like that. If we start seeing a rebound in the cruise lines and the airlines have been beaten up over the last 3 months.
I think that's a pretty good theory if we get crude to play along, right?
Yeah.
Because that definitely is complicated. 1 second, drawing a little line on here real fast to connect those higher lows. And for CCL, you know what? There's a good case for there being support basically right here.
Right here.
It might be breaking through it. Hard to know, but yeah, to that point.
Yeah, the RSI 23. I mean, anything below 30 is oversold. It's been there for a few days.
There was a pretty consistent line from the October lows last year connecting those higher lows, but we're really threatening that trend right now.
Yeah.
All right, we do have a bearish trend, trade rather, in MetLife, which is down about 2.5%. I haven't thought too much about the insurance plays this year, but
they've been underperforming. Yeah.
A few times we got a couple big events.
Yeah, and there's two different areas. Well, the catastrophe insurance players like Allstate and the others. There's activist investors in that one. Progressive's actually done pretty well. Prudential down on the year, but MetLife in life insurance business down 16% so far in 2023. They've got earnings on the 1st of November, so that's going to be a key catalyst for this company. Barron's just had an article over the weekend that it's oversold, attractive maybe at these levels, heading into earnings. So we'll have to wait and see. And they did grow revenues 4% year over year, $32 billion in the first half of 2023, offsetting total premiums by net investment income. So some pretty good, maybe green shoots on this one. It has been beaten down. So I think a trader thinking that we're not going to see anything positive on this earnings report because we saw a put buyer in there. But they went out to the December monthly cycle, 55 strike puts. Trade volume of 5,000, growth per average depth of about 20, net break even of 80. Expecting maybe some worse news than anticipated to capture that earnings event. You still got 2 months in this trade. Put volume with only 13,500 puts traded in the day overall in all option series. Put volume is about 7 times during the daily average volume. Probably due a lot to we typically don't see a big 5,000 lot trade in MetLife, but we're seeing it today. And so either protecting maybe a long stock position or expecting that the stock's going to fall.
Low ticker -800.
Trade with big bearish bias into it. All right, thanks for giving us a little both there. Two bullish trades with bears. Thanks, Tom. Coming up, let's keep talking about stock moves and revisit the gold story. Shares of Okta are getting hammered after their security company reported a hack. That's not good. Gino Ross, we thought by Gino talks some gold with us, and equities are still down. We have a long way to go. We're going to try and end it off the grows.
Schwab Bank Investor Checking. The checking account.
Extreme low, take alert.
Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With no monthly service fees or account minimums, unlimited ETN fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Accelerate your market knowledge. Shift your perspective. Mass market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
It's time to look forward
Find the next trend.
from every click to every tick.
We no fear of missing out on the next trend investment.
Available anytime, anywhere, on any device, for free. Empower your portfolio with the Schwab Network. Peace out, Coffee. I'm Jenny Ford. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Gold's on another good day, up 2.13%. But a lot of that and other assets. Scooping gold believers at this point. I mean, it's really pretty impressive. This upswing.
You know, it's interesting, OJ. In November of last year, I was asked to do a forward look, sort of an interview, and I said my trade of the year for next year was gold.
I remember.
Yeah, but I also failed to mention, got what you go time, this my trade of the next 5 to 10 years, really. Because when you look at it, at this particular point in time, mentioning gold on a good day, the S&P on a bad day, but talking about an S&P that's only up about a little bit more than 10% on a year now, and I'm sort of calculating that quickly in my head, and gold's up a little bit more than 9%, with a heck of a lot more volatility in the S&P. Obviously, the Nasdaq's still up over 30%, but the Russell is going to have its lowest close since guess when? October of last year. We all know what happened in October of last year, so the broader index is showing weakness in stocks, and that's not even really why gold is rallying right now, right? We're seeing as much as a flight to safety as a reference to the quality of the asset. It is not pointing to what's happening in interest rates. You look at the interest rate story, and we're seeing the 230s inversion is now basically flat. The 210s is at about -16 when I last checked. You remember we were -108 on that thing. So we're getting the normalization of the curve, but not because people expect all kinds of economic growth and higher inflation, therefore higher rates down the road. It's because of all of the issuance, number one. And
Low, take alert, -800.
These assets. We're looking at
Extreme low, take alert.
down year for bonds, which has never happened. So all of this points to gold and continued strength in gold.
Part is maybe something that works in a higher for longer environment, because I will say it does look. Look, we got the geopolitics stuff. You know, it's maybe helping us out a little bit.
That's pretty funny.
Steepening. Gold has been rallying, and so that curve steepening is kind of higher for longer trade than something so far. Arguably, just based on the chart, gold looks like it might be a higher for longer trade, which I would not have expected, frankly.
Yeah, normally when you see interest rates rising, gold suffers, right? Goes back to that old Warren Buffett theory of gold doesn't produce anything, it doesn't pay yield, etc. But gold also doesn't have the zombie companies, it doesn't have all the other things that equity markets
I struggle with it. I'm not by no means a gold bug. I haven't had gold in my portfolio every year of my investing life. No. But I'm in a crude oil trade. I'm in a gold hold. So I think gold is the issue because of the sort of economic, I don't want to call it a catastrophe, but there's going to be problems with this kind of deficit spending, this kind of deficits, and the huge issuance that's coming towards us at a very rapid speed. You're going to have problems. Foreign governments are now starting to alleviate themselves of the losses they've had in the U.S. Treasuries as well. China sold a record amount of bonds last quarter. Not to say that they're not going to buy the new ones, they likely are, but there's issuance that needs to be absorbed, and the Fed is in QT, not QE. So, that again all points to gold sustaining. I've said this on some shows already. My ultimate target, so I might as well say it here, my ultimate target for gold is about 2,800. I'm not talking about this year, obviously, and I'm not necessarily talking about next year, although I'm not ruling it out. Okay. All right. Like it. Always appreciate the insight to the trade. Thanks, Bob. Have a great weekend.
See you, AJ.
Bob, my team founder, Cap Trading Partners, sticking with the long gold trade. It's going to develop a story in the tech world. If you're sticking with the security company Octa, then you're going to be disappointed with this one. Jimmy Horn's got the latest big sell-off in the company after trying to rally back here this year. Big red flag, Jimmy.
Yeah, major red flag. This is not the headline you want when you are a cybersecurity company yourself. Because if you can't protect your own systems, how could you protect others? I mean, so we got this blog post that was from their chief security officer that announced today they identified adversarial activity that leveraged access to some stolen credentials to access OP support system as well as its overall management system. Now, they also say this threat actor was able to use certain files that were uploaded by some various customers as part of these support cases, and basically these malicious actors were then able to act. Workday management team is separate from their overall production services, which is fully operational and has not yet been impacted. They've notified all of these various accounts that have been impacted and said if you have not been contacted, it means that you are in the clear. You're good. You were not impacted. But we do know that they've been working with several customers to now investigate, taking measures, they said, to protect their customers, while also just sort of embedding different session tokens. They also said it wouldn't be a bad idea to try to change and update several of your various tokens and credentials to then make sure your system is secure. The company has not yet provided details on how many customers were specifically exposed or access to the breach. But what we do know is that this was sensitive data, such as cookies and session tokens, which then could be used to continually hijack future accounts. So this is going to be an ongoing problem. This is pretty serious. And what I also do know is from looking at their history, Okta has had multiple instances in the last 2 years. Again, not sentiment you want when you are, in fact, a cybersecurity company. We did see last year they were part of this data extortion group that was hacking and gave them access to several customers' accounts. That's not the headline you want, and today's headline isn't what you want again when this is the world in which you operate in.
Absolutely. Shares down big, and we've also seen the stock has the ability to sell off pretty hard on earnings too. So with those next month, I mean, this is going to be bit of a minefield, it seems like, because the stock already had trouble getting through basically $90 for the last couple quarters. So another thing to hamper the trade. Appreciate it, Jenny. Thanks for the assessment. All right, coming back, we'll have 10 minutes. Stock at the lows of the day. We've got our big picture panel joining us. Kathy Jones on bonds.
Low ticker at -800.
International picture. Don't miss it. Be right back.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial.
All right, so we're drifting lower.
Extreme low tick alert.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free.
Schwab Network. Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago
And from the heart of Wall Street, the New York Stock Exchange.
up to the minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7.
Separate streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader
Every market day.
Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Let's talk some big picture. Get ready for next week and a fallout from the last 5 days. Jeff Kleintop and Kathy Jones joining us. Kathy is chief
Back down to 42,
investment strategist.
25.
A culprit for a lot of selling today. You've got your eyes on not just the solar stocks here, but around the world.
552.
The downside today, and many of them selling off in sympathy with some of the news we heard from one of the big companies today, and that came after Tesla on Wednesday talked about lower solar deployments dropping in the third quarter. Look, I think this all gets back to interest rates, right? We've seen an incredible surge in rates. That means home financing is more expensive. Homeowners are putting less solar installations as a result. Interest costs are rising. Many of these companies, particularly in the alternative energy space, are big borrowers with leverage ratios much higher than those in the traditional energy space. And so they're suffering on that. And then, of course, long duration stocks, right? We know that as interest rates go up, these companies with very high valuations tend to suffer. I point out that First Solar, a company whose earnings have done pretty well, had a PE of about 50 back in 2021. It's now 15, so really eroded there as interest rates have taken their toll on many of these stocks. I think that's just a testament to what we've seen really across the board this week in the U.S. and abroad. Higher interest rates weighing on stock valuations.
Okay, so you do view it as having a very pure macro connection, basically.
All right.
Backlash to ESG and green implementation, but we really haven't seen that at the macro level. Government policies are still very much in place, including the recent investment act coming out of Washington, all in favor of more green energy. It's just this is really coming in clash with those higher interest rates. They're just unrelenting here, particularly for the clean energy space.
I think that's why it's particularly kind of shocking how poorly these companies have done, given the big spending that the government did put behind the sector about a year ago. So, all right, I love the perspective there. Very cool that it overlapped with your own view of the macro. The Kathy, next week we've got a bunch of data coming. We already heard from Jerome Powell. He seemed to open the door to a pretty firm commitment to higher for longer in some of the language. Tell me about what you're taking away from this one.
I don't know if Paul said anything that hasn't said before. I think he reiterated that they want to get to 2% inflation. He reiterated that
All right. Okay, we got 5 minutes to go. 5 minutes to go.
to many agencies say, well, we just don't know because we believe there's enough tightening in the pipeline to slow things down and bring inflation further down. But, we don't know if it's enough. We don't know what the
Okay, starting to see some short covering. Last 5 minutes. What's up?
What did you make of his comment that perhaps rates haven't been high enough for long enough, or that maybe the neutral rate has moved higher to explain kind of how we've avoided a major drop off in
I think the Fed has been surprised. I think they've done their work, and as many people have, and said, well, a number of factors came together to make the economy more resilient than anticipated. And you would anticipate going from 0 to over 5% in a very short period of time. He talked about companies having turned out their debt. Those are major companies, not the smaller companies who really can't turn out their debt like that. But he talked about that. He talked about the fact that consumers saved quite a bit of the money that they got during the pandemic. So they paid down debt. They firmed up their balance sheets. So he talked about how the economy really responded more positively, and that we did get a fair amount of fiscal stimulus. So, I think.
All right. So looking for Bitcoin to, do we see anything on the news about Bitcoin? Was there grayscale? Grayscale, Bitcoin.
As the dollar yields correlation, it's kind of, I don't know if it's broken, but it certainly has softened up a little bit, disconnected a little bit the past week.
It has a little bit. I don't know if that's just some of this geopolitical questions and money moving around the world.
Okay, so JP Morgan and Coinbase both indicating today that the Bitcoin ETF will be approved within months, starting with Grayscale.
Policymakers in Europe seem to have shifted how soon rate cuts may be implemented next year. The Fed seems to want to shy away from that conversation.
Right. Speaking of shying away, no Fed speak next week, Kathy, but lots of the data. Is it higher if the data keep coming in hot? Because again, this week they didn't really budge based on the good data.
I don't think the market's going to price in a high probability of a December rate hike very soon. I think we need accumulation of data before people shift their expectations. Because remember, we've been told by 12 members of the FOMC that they think they've gone far enough in terms of rate hikes. So you'd have to have a pretty big set of numbers to alter that, and that's not going to happen overnight. Or even in a week's time, that will have to be changed data. So I'm not going to disagree. We have some GDP numbers that just estimates.
I can't help but think if Sam Bankman-Fried had just used a little bit of money management, it's one of the first things you learn as a trader. You got to pay attention to your risk. Okay, we're closed. We are closing. Hope everyone has a great weekend. I'm your host, Cousin Benny, coming to you from theclosingprint.com. At the closing bell, October 20th. It's 3 o'clock. Have a great evening, everyone. Take care, and we'll see you on Sunday for the weekend video. Have a good one. Take care.